and opportunities holistically. Now, before we begin, I would like to thank our supporting organizations. Thank you to the Government of India, Ministry of Commerce and Industry, Office of Additional Directorate General of Foreign Trade Ludhiana, Federation of Indian Export Organizations, SME Chamber of India, Trade Promotion Council of India. And we would also like to thank our event partners, Tradewind Finance, Saxo Group, Vivanta Capital, ICT Circle, Trade Day Stream, Euroex and Bank, India Factoring. And with immense pleasure, we would also like to announce our next review series, which will continue in the Middle East and Africa. It is the Middle East and Africa Trade Review to be held on the 28th of June 2021. Now, for further inquiries, you can get in touch with our team. With our amazing speakers on board, let us begin with our first keynote session. I would like to welcome Mr. Suvit Shah, Joint Director General of Foreign Trade, Government of India, Ministry of Commerce and Industry, Office of Additional Directorate General of Foreign Trade, Ludhiana. He has supported the trade and finance industry to make India Atmanirbhar. Mr. Suvit will present on the import substitution and opportunities, which is the Atmanirbhar Bharat, and new opportunities during the pandemic in export. Now, before I hand over to Mr. Suvit, please note that if you have any questions during the session, you can send them across to me on the chat and I will take it up with him. If anybody is facing any technical issues at their end, please drop me a word or click on the raise icon and we will attend to you. I will now hand over to Mr. Suvit. Welcome, Mr. Suvit, and over to you.
Thank you very much. Probably you can hear my voice there. Madam, my voice is clear?
Yes, Mr. Suvit, it's clear.
Thank you very much. Thank you all participants. Good morning to everyone. Or Ministry of Commerce की तरफ से I'm welcome you all. Within 15 minutes, I will explain import substitution, PLI scheme, foreign trade policy, district exporter and all. So straight away I am transferring my screen to my presentation. Thank you very much. My introduction is I am Suvit Shah, Indian Trade Service Officer, 2008 batch. Right now I am joined DGFT Ludhiana. I am looking after Punjab, Himachal Pradesh, parts of Haryana, Chandigarh, Jammu Kashmir and Ladakh. With my trade experience and government policy within after Corona period, there are three different policies government announced. First is import substitution, second is PLI scheme, and third is district exporter. I'm explaining the scheme within 15 minutes. Be there. So most of people are from India, so I would like to explain my things in Hindi because this is Atmanirbhar Bharat. आत्मनिर्भर भारत में प्रधानमंत्री जी हमारे माननीय और ऑनरेबल प्राइम मिनिस्टर ने हमेशा आत्मनिर्भर भारत के बारे में काफ़ी टाइम से बात करने लगे हैं. ठीक है, तो इसको स्कीम के बारे में, उसका कंसेप्ट के बारे में मैं आपको बताना चाहूँगा. इसके पहले इंडिया के थोड़े ट्रेड आंकड़े जान लें. इंडियाज इम्पोर्ट इन 1819 अराउंड 35 लाख करोड़, जो स्क्रीन में आपके सामने अराउंड 36 लाख करोड़ के आसपास था. 1819 फिगर मैंने इसीलिए पकड़ा है क्योंकि 1920 में दैट इज वेरी मच कोरोना पीरियड, इसमें ट्रेड स्टेबलाइजेशन नहीं हुआ था. 2021 में भी कोरोना पीरियड हाफ ऑफ ईयर्स चला हुआ था, इसीलिए 1819 हमारा स्टेबल ईयर माना जाता है ट्रेड में, इसीलिए मैंने ये आंकड़ा पकड़ा. अराउंड 36 लाख का करोड़ का हम इम्पोर्ट करते हैं. तो जो इम्पोर्ट करते हैं एवरीबडी नोज के सबसे ज़्यादा इम्पोर्ट हम चाइना से करते हैं, अराउंड 4.6 लाख करोड़ ह्यूज अमाउंट. उसके बाद यूएसए, उसके बाद यूएई जो मिडल ईस्ट का जो ये प्रोग्राम चल रहा है. दुबई इज ट्रेडिंग कैपिटल है अपने मिडल ईस्ट का, प्लस ट्रेडिंग हब है. इसके लिए उसके आंकड़े भी, और पेट्रोलियम वगैरह सऊदी अरेबिया से, इराक से पेट्रोलियम, हांगकांग चाइना का पार्टी है, स्विट्जरलैंड वगैरह में से हाई मशीनरी, हाई टेक्नोलॉजी वगैरह से आता है. कोरिया से भी मशीनरीज हैं, स्टील वगैरह इम्पोर्ट करते हैं. इंडोनेशिया है, सिंगापुर है, वो साउथ ईस्ट एशियन कंट्री आसियान में है, वहाँ से भी हमारा अच्छा खासा इम्पोर्ट है. अगर इम्पोर्ट सब्स्टिट्यूशन और चाइना को हम टारगेट करें तो चाइना से ही 1819 में हमारा ऑलमोस्ट इम्पोर्ट था 5.8 लाख करोड़, ह्यूज अमाउंट हमारा. इतना मिस टोटल जो हमारा इम्पोर्ट है इसमें 17% हम चाइना से इम्पोर्ट करते हैं. ठीक है, चाइना और हांगकांग एक ही रीजन है, एक ही नेशन है, इसके ट्रेड फिगर्स दोनों के अलग अलग आते हैं. तो दोनों का टोटल में कम करें तो 5.81 लाख करोड़ इंडिया की इकोनॉमी की बात कर दिया जाए तो हमारे पास क्रूड अवेलेबल नहीं है, हमको बाहर से ही इंपोर्ट करना पड़ता है। हाई एंड टेक्नोलॉजी अवेलेबल नहीं है, हाई एंड रिसर्च एंड डेवलपमेंट अवेलेबल नहीं है, उसका सब्सटीट्यूशन हमको ढूंढना बड़ा मुश्किल काम है फिलहाल नियरेस्ट टाइम में। मगर चाइना से जो हम इंपोर्ट करते हैं, फॉर एग्जांपल इलेक्ट्रॉनिक करते हैं, केमिकल्स वगैरह करते हैं, मशीनरीज करते हैं, उसको इजीली रिप्लेस किया जा सकता है। इंडिया के पास ऐसा कोई चीज़ नहीं है कि जैसे कि एंटरप्रेन्योरशिप नहीं है, कैपिटल नहीं है, लेबर नहीं है, ऐसी कोई चीज़ नहीं है कि जिससे हम चाइना को रिप्लेस ना कर पाए। तो मेरा आज का फोकस इंडिया इंपोर्ट सब्सटीट्यूशन प्लस चाइनीज प्रोडक्ट को रिप्लेस करने के बारे में, जो हमारा गवर्नमेंट का पिछले 2-5 साल में प्राइम फोकस रहा है। तो मैंने मेरे पास जो ट्रेड का नॉलेज है और मेरे पास ऑफिशियल एक्सपीरियंस है, उस हिसाब से आई फाइंड आउट 3 टारगेट आइटम्स को मैंने किया है। फर्स्ट इज इलेक्ट्रॉनिक, सेकंड इज मशीन्स एंड मशीनरीज एंड थर्ड इज केमिकल। वो चाइना से हम ह्यूज इंपोर्ट कर रहे हैं, अगर वो ऐसा है कि हम आराम से उसको रिप्लेस कर लीजिए। पहला हम इलेक्ट्रॉनिक आइटम्स के बारे में जानेंगे। सारे यहाँ बैठे हुए लोग एच एस कोड को जानते हैं, क्योंकि जीएसटी के आने के बाद एच एस कोड बड़ा फेमस हो गया है। तो जो एच एस कोड में जो 85 नंबर का एच एस कोड है इलेक्ट्रॉनिक गुड्स के लिए है, तो चाइना हम 1819 में हमने लगभग 1,52,000 करोड़, ह्यूज अमाउंट, 1.5 लाख करोड़ का हमने इलेक्ट्रॉनिक्स गुड इम्पोर्ट किया था। 42% हमारा जो इलेक्ट्रॉनिक्स गुड का इम्पोर्ट है वो चाइना से होता है। इस यूज अराउंड 50% जो भी गुड्स आता है उसमें 50% जो आप नज़र के सामने आसपास देखते हैं, चाहे माइक है, माउस है, कीबोर्ड है, मोबाइल फोन्स है, सारी चीज़ें हम चाइना से लेते हैं। कोई हाई एंड मशीनरीज वगैरह, हाई एंड इलेक्ट्रॉनिक गुड्स होता है वो यूरोपियन कंट्रीज से आता है। बाकी ये सारे गुड्स हम जो नॉर्मल कॉमन कंज्यूमेबल आइटम्स हैं सारी चाइना से आती हैं, और इजीली हम उसको रिप्लेस कर सकते हैं। तो आपको पता होना चाहिए, क्योंकि हमारे काफ़ी टाइम से हमने इंफॉर्मेशन आईटी में क्रांति कर ली, हमारा रियल एस्टेट में हमने अच्छे अच्छे काम करवा पाए हैं, इंफ्रास्ट्रक्चर में अच्छे काम करवा पाए, मगर इलेक्ट्रॉनिक्स गुड्स में हम कभी भी हम अच्छे काम नहीं कर पाए। आफ्टर 90s जो एक इकोनॉमिक बूम चला था पूरे वर्ल्ड में, 25 ईयर्स, उसके 30 ईयर्स हो गए हैं, उसमें हम आईटी में आगे कर पाए, मगर इलेक्ट्रॉनिक्स गुड्स में हम कहीं साउंड बेस्ड बना नहीं पाए हैं। 98 के बाद इलेक्ट्रॉनिक्स गुड्स में ऑल ओवर द वर्ल्ड कस्टम ड्यूटी जीरो थी। आपको पता ही होगा कि थोड़े टाइम पहले, 10-12 साल पहले दुबई से लोग आते थे, टीवी लेके आते थे, मगर उसमें ड्यूटी जीरो थी, इसीलिए लेके आ पाते थे। तो मैं कितने आइटम आपके सामने बताना चाहूँगा कि आइटम में बिजनेस करना, चालू करना, एक्सप्लोर करना, सबसे बेस्ट टाइम है इंडिया में इन्वेस्ट करना, इंडिया में से माल एक्सपोर्ट करना, इंडिया में प्रोडक्शन करना। ठीक है, तो मैं 8 डिजिट का कोड आपके सामने मैंने बताया। 8 डिजिट यानी स्पेसिफिक प्रोडक्ट और स्पेसिफिक चीज़ को फोकस करके मैंने बताया कि इसको इजीली कैसे रिप्लेस कर पाए। सबसे पहले हम चाइना से, और सबसे ज़्यादा हमारा इलेक्ट्रॉनिक्स आइटम में सबसे बड़ा हमारा ये है या टेलीफोन्स, सॉरी मोबाइल फोन्स, जो आपके सामने हर एक के पास है ही है। पिछले 4-5 साल में सरकार ने काफ़ी टारगेट किया है कि मोबाइल फ़ोन का मैन्युफैक्चरिंग हमारा वहाँ शिफ्ट हो जाए। हमको काफ़ी सक्सेस भी मिली है। नोएडा में वन ऑफ द लार्जेस्ट मोबाइल यूनिट्स बनने लगे हैं। नोएडा लीडिंग इन द वर्ल्ड हो गया है आजकल। चाइना, वियतनाम और साउथ ईस्टर्न एशिया मार्केट्स के अलावा एक नोएडा एक बड़ा हब बन के उभरा है। तो हमने वो वाला रिवोल्यूशन कर लिया, विद इन 2-3 ईयर्स में ही कर लिया है। बैंगलोर वाला रीजन भी आगे बढ़ चुका है। एप्पल ने, सैमसंग को ऑलमोस्ट इंडिया में बनने ही लगा है। बाकी काफ़ी कंपनीज को हम इनवाइट कर लेंगे। मोबाइल फोन्स यानी ब्रांड नहीं होता है, खाली खाली मान लो कि सैमसंग के, एप्पल वगैरह नहीं होता। मोबाइल फोन्स एक पूरी एक लाइफ साइकिल होती है, जिसमें सर्किट्स होती है, कैमरा होता है, स्क्रीन होता है, गार्ड्स होता है, मेटल की बॉडी होती है, प्लास्टिक की बॉडी होती है, रेंज ऑफ आइटम्स, अराउंड 1000 प्लस डिफरेंट आइटम्स उसमें लोड होती है। तो सेकंड नंबर का जो वो वाला है, तो मोबाइल फोन्स की जो एसेसरीज है, अंदर कोई असेंबली है, 85176290, या तो मेरे स्क्रीन में आप ये देख ही सकते हैं, आपके वहाँ पे आराम से देख सकते हैं। सेकंड थर्ड पे जो चीज़ें आती, सर्किट्स, जो हरे कलर ग्रीन कलर की सर्किट्स हम देखते हैं, पीसीबी सर्किट्स, उसमें पूरी दुनिया है, उसमें पूरी दुनिया इन्वॉल्व है, मगर हमने कोई अच्छा काम नहीं कर पाए, और हमारे लिए आज के बाद में सबसे बेस्ट अपॉर्चुनिटी इसमें बनी है। एक अच्छी सी कार, ऑडी वगैरह कार ले लीजिए, उसमें अराउंड 200 टाइप की डिफरेंट सर्किट्स होती है। आज कोई भी इलेक्ट्रॉनिक्स गुड्स है आपके सामने, आप ऑफिस में के घर में जहाँ पे भी बैठे हैं, आसपास ऐसी कम से कम एक ही रूम में कम से कम 50 to 60 डिफरेंट सर्किट्स काम करती हैं। इसके बाद अभी सोलर का ज़माना है। आपको पता है इंडिया में सोलर असेंबली के काफ़ी प्लांट्स हैं। मैं काफ़ी टाइम से सोलर इंडस्ट्री को फॉलो भी कर रहा हूँ, प्लस मेरे मिनिस्ट्री की रिस्पॉन्सिबिलिटी के हिसाब से उसको ट्रैक भी करता हूँ। मगर हम सोलर सेल नहीं बना पाए। मीन्स सोलर जहाँ सन का जो एनर्जी जहाँ से आता है वहाँ से फोटो वोल्टिक एनर्जी ट्रांसफर करता है इलेक्ट्रॉनिक एनर्जी में, वो हम सेल नहीं बना पाए। हमारे पास जितने प्लांट्स है, जितनी हमारे पास स्ट्रेंथ है, वो असेंबली करते हैं सोलर पैनल बनाने की, मगर सोलर सेल अभी भी अच्छा बना नहीं पाते। फॉर्चुनेटली पिछले 1 साल में 1.5 साल में काफ़ी कंपनीज ने उसमें देखना रिसर्च करना चालू किया, इंटरेस्ट लेना चालू किया। फिलहाल आज भी हम उसमें काफ़ी हद तक पीछे हैं। प्रिंटेड सर्किट जिसको कॉमन पीसीबी बोला जाता है, वो सर्किट अपने पास हाईएस्ट इलेक्ट्रॉनिक कम्युनिकेशन इंजीनियर्स हैं, हाईएस्ट इंजीनियरिंग कॉलेज हैं, हजारों स्टूडेंट्स इसमें निकलते हैं, कैपिटल हैं, लोग जानते हैं, तो भी हम नहीं कर पाए। मेमोरी नाम आजकल बिल्कुल वो वाला नहीं है, मेमोरी भी अच्छी हम ये कर नहीं पाए। मेरे पास टाइम कम है, इसलिए एक एक डिटेल में नहीं जाता हूँ। नेक्स्ट में जाऊँगा मशीन्स पे। कोई भी इकोनॉमी तभी आगे बढ़ सकती है जब वो मशीन्स का कर देते हैं। अगर 1950-47 की बात करूँ, जब इंडिया आज़ाद हुआ था, तब भी हम 90% मशीन बाहर से लाते थे। आज भी हमारा इतने सालों में हमने कुछ मशीन में बड़ी कोई रेवोल्यूशन नहीं किया है। जो मशीन बनाते हैं इसमें से 30% मशीन आपके अगर 93,000 करोड़, अराउंड 1 लाख करोड़ के मशीन हम बाहर से इम्पोर्ट करते हैं। मशीन का जो ट्रेड बास्केट देखें, सबसे ज़्यादा लैपटॉप है, एयरक्राफ्ट से बट चाइना से नहीं करते हैं। सारे मशीन हम बाहर से ये करते हैं। लैपटॉप और जो ये अपने इलेक्ट्रॉनिक गैजेट है, इसमें तो आराम से हम रिप्लेस कर सकते हैं चाइना को, मगर अभी हमको आज दिन तक इतनी बड़ी सफलता नहीं मिली है। इंजन पार्ट्स हैं, ऑटो पार्ट्स हैं और डिफरेंट मशीनरी के पार्ट्स हैं। 8426, 8429, 84, मेरा काम तो यहाँ 2 मिनट आपको बताना, घर पे जाके रिसर्च करना आपका काम है। विदिन 5 मिनट्स में पूरा करूंगा क्योंकि मेरे पास टाइम कम है। थर्ड मेरी आइटम में जाऊंगा केमिकल्स। आज केमिकल के बारे में आप कोई भी टीवी ऑन करेंगे, केमिकल के बारे में ही बताते हैं हम। ठीक है, इसमें मेजर केमिकल्स आप स्क्रीन के सामने देख लीजिए। स्टेराइन है, पी एक्सलाइन है, सेचुरेटेड एसिटिक कार्बन है, मिथेनॉल है और एसिटिक एसिड वगैरह, जितने हम अच्छा यहाँ पे कर नहीं पाते हैं। भी कोरोना का जमाना है, रेमडेसिवियर का नाम हर घर में लगने लगा है। मैं काफ़ी टाइम से रेमडेसिवियर के लाइसेंसेस इश्यूज वगैरह करता हूँ। उसके कारण से जो जितने ड्रग्स हम बनाते हैं, जितने भी ड्रग्स बनाते हैं, उसका रॉ मटेरियल एपीआई बोलते हैं, वो सारे ऑलमोस्ट हम चाइना से इम्पोर्ट करते हैं। जो क्योंकि दुनिया में कोई भी कंट्री मेड इन चाइना मशीन से लेना चाहता है, मेड इन चाइना मोबाइल लेना चाहता है, मेड इन चाइना ट्रक लेना नहीं चाहता है। ट्रक में आज भी इंडियन कंपनी ने, जो बाकी वर्ल्ड है अमेरिका यूरोप को छोड़ के, इंडियन कंपनी का दबदबा कायम है। मगर अनफॉर्चुनेटली आज भी हम सारे रॉ मटेरियल चाइना और बाकी देश पे डिपेंडेंट हैं। आज कोरोना का हमारे देश में भी वर्स्ट एवर टाइम चल रहा है। उसमें भी रेमडेसिवियर का, जो मैं काफ़ी टाइम से मैं जानता हूँ, आप लोग और लोग तो आजकल के जानते हो, काफ़ी टाइम से तो मेडिसिन को जानता हूँ, उसका भी रॉ मटेरियल के लिए हम पूरे यूएसए पे अभी डिपेंडेंट है। हम यहाँ से रेमडेसिवियर असेंबली में थोड़ा उसमें प्रोसेसिंग करते हैं, कुछ और ज़्यादा काम नहीं कर पाते। टैमेटोमिजिविल सुम करके मेडिसिन है और डिफरेंट मेडिसिन है। अभी ऑक्सीजन का हर घर में, तो हर मेरे घर से लेकर हर घर में ऑक्सीजन का नाम और ऑक्सीजन के बारे में लोग पूछना चालू करते हैं। ऑक्सीजन बनाने वाली मशीनरी भी हम प्रोड्यूस अच्छी नहीं कर पाते, वो भी 100% हम इम्पोर्ट पे डिपेंडेंट है। ये सारे एक तो आज हमको कोरोना ने हमारी आंखें खोली है, हम लोगों पे बाहर पे कितना डिपेंडेंट है। हमारे पास सारी फैसिलिटी अवेलेबल है, फिर भी नहीं कर पाए। तो गवर्नमेंट ऑफ इंडिया की एक सबसे बड़ी और सबसे शानदार मोस्ट सक्सेसफुल स्कीम पिछले 3-4 साल से प्रोडक्ट लिंक्ड इंक्रीमेंटल स्कीम। इसमें ये जो प्रोडक्ट्स और मशीनें मैंने चीज़ें बताई, अगर वो इंडिया में आप प्रोड्यूस करते हैं, तो इंडिया में आप प्रोड्यूस करें तो इंक्रीमेंटल आपको बेनिफिट दिया जाता है। मीन्स आपको बेनिफिट गवर्नमेंट देती है, आपको इंसेंटिव वाइज देती है। मेरा काम खाली नाम बोलना है, फिर आपको रिसर्च गूगल आपके सामने ही है, आप अंदर बैठ के 2-5 घंटा आपके घर में करके ये चीज़ें जान सकते हैं। गवर्नमेंट 4 to 6% इंक्रीमेंटल सेल्स, मीन्स आपको आज मोबाइल फ़ोन का मैंने 1 करोड़ का सेल किया है, नेक्स्ट ईयर में 1 करोड़ 50 लाख का सेल करूँगा, तो 50 लाख का जो इंक्रीमेंट हुआ, इसमें गवर्नमेंट डायरेक्ट बेनिफिट देती है। वही मैंने जो एग्जांपल आपके स्क्रीन में मोबाइल फ़ोन का दिया हुआ है। ऐसे गवर्नमेंट ने डिफरेंट सेक्टर्स पकड़े हैं, जैसे ऑटोमोबाइल, ऑटो कंपोनेंट्स, फार्मा, स्पेशल स्टील वगैरह आपके स्क्रीन के सामने है, वो वाला पकड़े हैं। मेरे पास अब 2 ही मिनट है। सरकार का ये बजट में सबसे ज़्यादा जो फोकस रहा है एमएसएमई पे रहा है, क्योंकि दुनिया की कोई भी कंट्री विदाउट एमएसएमई आगे बढ़ ही नहीं सकती। जो हमने हाईएस्ट एवर फंड, जो सरकार में हमारा माननीय और रेस्पेक्टेबल फिनेंस मिनिस्टर श्रीमती निर्मला सीतारमण जी ने अपने बजट स्पीच में बताया, 15,000 करोड़ ह्यूज अमाउंट एमएसएमई के लिए डाला है। स्टील कॉपर में हमने जो भाव 30 साल में सबसे ज़्यादा बढ़े हैं, तो उसकी ड्यूटीज़ कम की हैं। टेक्सटाइल सेक्टर में जो नायलॉन जो रॉ मटेरियल होता है उसकी ड्यूटीज़ कम की है हमने। प्लास्टिक गारमेंट्स, लेदर जो आराम चाइना से इंपोर्ट होता है उसकी ड्यूटी बढ़ाई है, जिसमें रॉ मटेरियल में हम यहाँ पे अच्छी तरह से काम कर पाए। और आप ध्यान से जो बजट का ध्यान से देखेंगे तो हमने ड्यूटी स्ट्रक्चर ऐसा बनाया कि धीरे धीरे इंडिया में उसका प्रोडक्शन होने पाए, और ये हमको उसके फ्रूटफुल रिजल्ट भी मिलने वाले हैं और मिल रहे हैं। मैं क्या काम करता हूँ, हम लोगों ने क्या काम किया है उसके बारे में बताऊँ। प्रधानमंत्री जी का एक प्रोग्राम था डिस्ट्रिक्ट एक्सपोर्ट हब, हर डिस्ट्रिक्ट को एक्सपोर्ट के लिए तैयार करना। हर डिस्ट्रिक्ट, पहली बार, अभी तक तो हम डिफरेंट सेगमेंट पे, डिफरेंट सिटी पे ध्यान देते थे, हम डिस्ट्रिक्ट मूव करते थे। वो डिस्ट्रिक्ट है मेरी रिस्पॉन्सिबिलिटी में, पंजाब आता है, हिमाचल वगैरह आते हैं, जम्मू कश्मीर वगैरह। तो हमने पंजाब का सारे डिस्ट्रिक्ट के प्लान, एक्सपोर्ट प्लान तैयार हो चुके हैं, स्टेट एक्सपोर्ट प्लान तैयार हो चुका है, हिमाचल का हो चुका है, जम्मू का होगा। विद इन पीरियड ऑफ टाइम आप हर डिस्ट्रिक्ट को एक्सपोर्ट बनते हुए देखेंगे। मुझे आपको रीच करना है, ये सारे कोई भी और जानकारी चाहिए, रेंज ऑफ वीडियोस, रेंज ऑफ मिनिस्ट्री, मेरी मिनिस्ट्री लगातार एक्सपोर्ट प्रमोशन के लिए काम करती है। मेरा नाम सुबित शाह, आप गूगल में और यूट्यूब में सर्च करेंगे, नाम के हिसाब से वीडियो मिल जाएगा। ज़्यादातर वीडियो हिंदी और गुजराती में अवेलेबल हैं। हो सकेंगे मैं हम एज ए गवर्नमेंट की साइड से, मिनिस्ट्री ऑफ कॉमर्स की साइड से हो सके मेरे ज़्यादातर एक्सपोर्टर्स को हम हेल्प करेंगे, और को हर लोगों को इनवाइट और मैं एनकरेज करना चाहूँगा, जल्दी से इन्वेस्ट कीजिए, अपना बिजनेस चालू कीजिए और आप ये एक्सपोर्ट चालू कीजिए। ऑल द बेस्ट, थैंक यू वेरी मच।
Thank you, Mr. Suid. That was a very informative presentation. Now let's open the floor for questions. And if you have any questions, please send it across on the chat.
Question to Mr. Shah, that how much we have imported from China in last 2021 till March, and particularly the product which is not manufactured in India. Can you explore on that information?
सेम डेटा सेम है। 2021 में डेटा काफ़ी अनस्टेबल है, क्योंकि फर्स्ट 6 मंथ में हमारा ट्रेड ऑलमोस्ट बहुत ही खराब रहा था, कोरोना में लॉकडाउन वगैरह था। इसीलिए हमने 18-19 का, इसीलिए मेरे पास तो सारा डेटा अवेलेबल है। 18-19 स्टेबल माना जाता है, क्योंकि जीएसटी भी इम्प्लीमेंट हो चुका था, प्लस कोई कोरोना का इफेक्ट नहीं था। अराउंड आप समझ लीजिए कि अराउंड हम 6 लाख करोड़ के आसपास का चाइना से हर साल इम्पोर्ट करते हैं। उसमें मेजर 85 नंबर का चैप्टर है जो इलेक्ट्रॉनिक गुड्स करते हैं, सेकंड 84 मशीन्स करते हैं, और थर्ड केमिकल करते हैं। ठीक है, उसका 8 डिजिट का कोड के साथ मैंने प्रेजेंटेशन में बताया। टू बी प्रिसाइज 6 लाख करोड़ का है। कोई नॉर्मल बिजनेसमैन के लिए इतने बड़े फिगर्स का कोई मतलब नहीं है। वो जो आइटम छोटी सी प्रोड्यूस करना चाहता है उसका है। अभी जो है पीसीबी है, जो भी है, सेमीकंडक्टर्स हैं, केमिकल्स हैं, उसका जो कोई बिजनेस खोलना और उसको एक्सपोर्ट करना चाहे तो ज़्यादा अच्छा।
और दूसरा ये था कि आप कह रहे थे कि हर जिले में, हर एवरी डिस्ट्रिक्ट, because this is an international program, so let me tell you and ask you a question in English. Each district you have decided to make a export hub. So how many districts already developed and how many districts yet to develop, so that I can take up with Mr. Amit Yadav, who is a good friend of mine, where I can discuss with him.
750 इंडिया में डिफरेंट डिस्ट्रिक्ट हैं, 750 प्लस माइनस। कोई डिस्ट्रिक्ट को पसंद नहीं किया है, क्योंकि सारे डिस्ट्रिक्ट को हमने पसंद किया। कोई भी कैन चूज नहीं, 100% सारे डिस्ट्रिक्ट पे फोकस करना है। हाँ, किसमें कैपेबिलिटी ज़्यादा और कम हो सकती है। पंजाब की बात करूँ, 22 डिस्ट्रिक्ट का डिस्ट्रिक्ट एक्सपोर्ट प्लान बन चुका है। मैं एज अ ज्वाइंट डीजीएफटी, हमने मिनिस्ट्री की तरफ से डेप्यूटी कमिश्नर यहाँ बोलते हैं, कोई जगह कलेक्टर बोलते हैं, तो वो सारे एज अ चेयरमैन उन्होंने पूरा इंटरेस्ट करके सारे डिस्ट्रिक्ट एक्सपोर्ट प्लान बन चुके हैं। ठीक है, वो फाइनलाइज मोड में, अलग अलग मोड में 750 का अलग अलग है। पिछले 2 साल से एक्सरसाइज चल रही है, खास करके डीजीएफटी की तरफ से पूरे ऑल ओवर इंडिया में। कोरोना की वजह से थोड़ा डिस्ट्रक्शन आता है, क्योंकि आप जानते ही हैं कि काफ़ी रिस्ट्रिक्शंस आ जाता है। सारे डिस्ट्रिक्ट का कोई अभी डिपेंड, क्योंकि काफ़ी स्टेट गवर्नमेंट के साथ काफ़ी कोलोब्रेशन वगैरह चाहिए होता है। तो पंजाब की बात करूँ, सारे डिस्ट्रिक्ट फाइनलाइज हो गए, खत्म हो गए हैं। स्टेट एक्सपोर्ट प्लान न्यूज़पेपर से भी पता चल जाएगा, एडमिनिस्ट्रेशन ऑफिस से भी पता चल जाएगा। बाकी सारे मैं जो अभी ट्रांसफर लेके आया गुजरात से लास्ट ईयर, वहाँ के भी सारे डिस्ट्रिक्ट एक्सपोर्ट प्लान पूरे तमिलनाडु के हो चुके हैं, महाराष्ट्र में मोर देन 80% हो गए। वो मुझे जो मेरा नॉलेज है उस हिसाब से नहीं बता।
Okay, thank you.
Thank you, Mr. Suvit. We have, it's not a question, however, Mr. Vikas Soni wants to know if, because the presentation has been very useful and informative, whether you can, they can receive the presentation after the webinar.
थैंक यू वेरी मच मुझे थैंक यू वेरी मच आप सबको और एडमिनिस्ट्रेशन को आपके थैंक यू वेरी मच
मिस्टर सुविद, क्या इस वेबिनार के बाद आप प्रेजेंटेशन भेज सकते हो? विकास सोनी को he's found the presentation extremely useful and informative, और वो चाहते हैं कि इस प्रेजेंटेशन के बाद, इस वेबिनार के बाद आप उनको प्रेजेंटेशन भेज दें, तो क्या वो पॉसिबल है? मेरे ख्याल से आप म्यूट पे हो। Mr. Suvid, you're on mute.
के प्रोग्राम के बाद मैं आपको अपने जो आपके मेल आईडी वगैरह आई विल सेंड माय पीपीटी ओवर दैट यू कैन डिस्ट्रीब्यूट टू ऑल योर पार्टिसिपेंट्स.
Perfect. Thank you so much. Now, we'd like to thank Mr. Suvid for his extremely informative presentation and answering all our questions. Moving on to the next keynote, we regret to inform you that Dr. Ajay Sahai from Federation of India Export Organization will not be able to join us due to some unavoidable circumstances, but we would like to thank the Federation of Indian Export Organization for all the support, and we look forward to having them on board for future events. Let's move forward with the next keynote in line. Please welcome Mr. Chandrakant Salanke, Founder and President, SME Chamber of India and Federation of India SME Associations. Mr. Chandrakant has founded various organizations to support SMEs, young entrepreneurs, and startups for business growth, export promotion, impartial knowledge, and education for transformation of their business activity, and setting up industries and expansion, along with diversification of business activities in India and overseas. He's been organizing state, national, and international level activities and led SME delegations to various countries, project visits, and resolved various issues related to industry and business sectors. Today, he is with us to present and shed light on looking beyond the pandemic, India's outlook on revitalizing global trade. Welcome, Mr. Chandrakant. Over to you.
Thank you very much for inviting me, and special thanks to all the delegates and participants, those are listening to us today. First of all, let me give you the glance of about activities, and before that, let me thank Mr. Shah, because he has done my speech very easy, because he has presented all the figures, so that I don't want to repeat the same one again to take a time of the delegates and participants. Nevertheless, let me introduce about the SME Chamber of India, which is working for last 28 years old, and we are supporting Indian companies to go global for last 15-20 years. Rather, we have especially focusing to make the Atmanirbhar SMEs for last 20 years, and we are supporting them to expand business not only regional but national and international level. We are identifying the business partners for the joint venture, technology transfer, contract manufacturing, and supporting for the strategic business partnership, marketing, setting up various industries and abroad, wherever they get exploring the business opportunity and looking for future development. Since we are now facing a big problem in this because of the pandemic, let me give you a glance that in 2019 October, that time our friend circle, we were talking about 2020, because the new year 2020 is coming, and the Dubai is always known to that hub for organizing IPL. Since the India is having problem, the IPL moved to Dubai. So the 2020 match we are playing regularly, and India is doing best work in that. IPL is doing good. So we thought that let us play a 2020 match like a business activity, like a trade promotional activities, enhance trade, do some unique thing, like a 2020 play. But somehow in November and December first week, we started getting the information from the China and the other country that, there is something, phishing going on in China. The Chinese virus impacted to the whole world. And because of that, it is impact on the global trade. So therefore, when started January, February, we started listening about learning from this virus. But when this is impacted to India, Gulf and other country from the March onwards, it is a very, very big impact. And therefore, we have started, getting a rather painful or a suffering system for the all, particularly health, wealth, trade, business, and particularly the activities on the organized by the startups, young entrepreneurs, women entrepreneurs. So, friends, this 2020 played very well, impacting this with along with the virus on the industry and trade. Now, today we are, revolutionizing the particularly the global trade. How this trade can be, come on the track, come on the proper way where we can start again our business activity peacefully, movement out of the house, out of the business, out of the country, various country, wherever we go we can peacefully, freely we can do business, we can participate in exhibitions, we can start our meeting people, their office, B2B meeting, exhibition, conferences. When this day will come, I'm waiting for a long time. Last 1 year exactly, I'm waiting for that, because this all the activities are the platform for enhancement of the global trade, a trade, business, and manufacturing activity. Therefore, this is a big impact on the industry, particularly for the manufacturers, particularly those are exporters, and particularly those that depend on the exports and manufacturing industry. Look at the SME sector in India and other countries, because they don't have abundant supports, they don't have abundant support services, they don't have abundant capital to think about after 12 months or after 2 years. They are thinking only for 3 months that they invest, they buy some product for a raw material product for their production, limited version. Now, because of this pandemic, raw material cost is high, raw material cost is become very difficult, raw material getting is difficult, and most importantly the labor, the manpower is a big challenge for the industry, particularly SME sector. In India, since we are talking about the India trade review, in India currently a lot of migrant labor come from the rural area to work in a city or industrial area, they moved back to their hometown, and therefore Indian industry is facing a lot of problem. Look at the some states now, there is a lockdown, strict lockdown is there. Maharashtra, Tamil Nadu, Delhi also, Karnataka also there is, and movement is also other somehow restricted. So therefore, how we can plan again to come out from this sector? First of all, we have to use masks, social distancing, take care of all the the health issues, and particularly listen and understand the direction given by the government, by your local authority. Depend on that, you can start moving out, you can start working properly, and most importantly, you have to find out the ways where you can understand the requirements, understand the specific requirements, and of course you have to store now raw material, because raw material easily is not getting for any businesses. Now look at the oxygen level in India, oxygen supply level in India is a huge scary situation now. Ventilators is not available. So Mr. Shah has already mentioned about a lot of products which is now we were importing from the China, that we have stopped now. So we have to manufacture in India. Therefore, I appeal to the government that do not only make some policy on the paper. The policy should be implemented in a right way and the needy way, because most of the policies on the paper and they are not implemented on the properly at the benefit of the SME sector industry. Second thing, Mr. Shah said that they have identified the districts for the making the export hub. This is a very unique initiative by the government, but in that, how the local district level SME or exporters, will get the opportunity to identify the market. That is the most important. Therefore, let me give a message from this platform today that SME Chamber of India and we have a SME Export Promotion Council. It's an independent body, it's a registered body for last 15 years, and we are supporting Indian companies to identify new market, identify the supplier, identify the manufacturer, identifying the genuine suppliers, genuine manufacturers, genuine exporters, so that to meet their requirements to get the proper and competitive price, quality, and as well as continue to supply. So therefore, friends, do not worry about the new market, because my team is working very hard and they are finding new market for all of you. And I'm sure that this pandemic definitely had given a lot of lessons to us, particularly for the health, wealth, and future. So therefore, we have to alert, we have to adopt the new concept, new ideas, because we are working from home. Advanced technology, advanced communication skill required to be required, to be adopted. And more often, we have to suggest, support, and educate our employees, our friends, our entrepreneurs friends, that how they can acquire advanced technology, not only for the communication but the improvement of the quality, productivity, and mostly the unique services, the quality services, international level kind of services, so that Indian company can become a global company. Going global is not an easy task. You have to learn about the local market. You have to learn about the local situation. There are the policy, the taxation, the trade policy, the trade barriers. Then only you can start. Nevertheless, India is a big market, and I'm sure that we are hiding now and avoiding the China, so the other country can tap big business in India. This is the right time to Indian businesses identify the business. Therefore, I would like to suggest and inform the delegates, those are watching from the listening from the out of the country, they can approach our SME Chamber of India for identifying the local partners for manufacturing, contract manufacturing, or strategic business partnership. If you want to support them for as an investment, or if you are looking for technology transfer, if you're looking to technical alliance, even we can support you to find the industrial premises, ready-made industrial premises. We have a partner, Bhumi World. They are having the abundant land. They are having, and it's a nearby Mumbai, and near hardly 20 kilometers away from the port. So that is also a place where you can set up your business without any hassle. Immediately in 24 hours you can start business. This way we are giving a opportunity and support to the industry. They have a ready-made industrial premises. We have a lot of members, strategic partners in India. They can provide you all the support. And those are watching and listening today, the importers, especially the importers. If they are looking India market as a partner, India market as a buying product, I can suggest and support them to find out the manufacturer, the quality manufacturer, the competitive cost they will provide you. And I'm sure that this support will be definitely useful for you, hassle free, and for the commercial aspect also, and reducing your burden to find out the right business partner. I think this is a right time, and this is a the right platform where we have to review our trade barriers also, trade promotion activities also, because I am pursuing the from Prime Minister to each state government that how they will support Indian SMEs to making them self-reliant. Unless until they will become a competitive, they will not compete with the world market. So therefore, bankers, government, and local government should put efforts to make the SME global competitive, and then only we can say that India is becoming manufacturing hub for the world. And we have to achieve the target growth to make the India as a $5 trillion economy, to accomplish the dream project of our honorable Prime Minister. Therefore, I appeal to all the businesses, all the manufacturers, exporters, importers from India and out of the country, approach us. We will provide you helping hand. We will provide you proper advice and proper support services. Then only we can think about next year when we are thinking, or when we are talking or discussing this point in India Trade Review next year. That time you will satisfactory. You will say we are playing 2022 match in 2022. Thank you.
Thank you so much, Mr. Chandrakan, for taking us through this wonderful presentation. Let us now see if we have any questions from the audience. The floor is now open. Mr. Chandrakant, we have a question from Rajat Metal.
Please.
He says, whenever someone starts export-import business, one is always scared of not flouting any government rules unknowingly. So is there a way to educate SMEs to first get a hands-on experience of how the trade works before they can venture into it? That's one of the questions. And the next one is, all the CHA agents in the market generally advise the illegal ways to SMEs eventually with an aim to make money later. So how can we avert this?
See, two things are there. SME Chamber of India, along with SME Export Promotion Council, we are organizing regularly educational program for the entrepreneurs, for their particularly the employees, and especially on the how to start export, how to start import, the procedural system for the export import business, what are the facility available for the government of India, how they can take advantage of the various facility or the policy or rather Mr. Shah has already said that about product link the advantages and incentives that can be given by handholding by SME Chamber of India's platform. We have a SME Business Management Institute. Through that, we are supporting our all the entrepreneurs. Regularly, we are organizing not only entrepreneurs. Entrepreneurs is bringing their main force, the export executive, marketing executive, or finance executive to attend that seminar. So please look at www.smechamberofindia.com, where you can get more information about next webinar or next event, so that you will get a lot of idea, a lot of information. Thank you. What is the second question?
The question was, I think the question's been answered. He wanted to know how to avert when someone illegally gives you, basically, generally the advice from CHA agents are to go forward in illegal ways so they can make money later. So how do we avert that?
That you have to approach the right consultant, because we have in India, there are plenty of consultants. Those are providing the proper advice and proper guidance. So we have an in-house consultant. They can approach us. We can definitely connect with it. Only thing is that they have to present their issues or problem. Another one, CHA, those are making or creating problems. You can send their information so that we can connect with their association or their leaders. Those are taking care that that sector should not be violated any their rules or regulations.
Well, thank you. The next question is, what are the financial supports and protections provided to exporters during the pandemic?
The government of India is giving support to the exports. They are putting efforts for the identifying the market by way of some incentives and schemes. But you have to identify or define what kind of support you are looking. Rather, you are looking for finance, then trade finance can be obtained from anyone. There are plenty of organization like a Tradewind or any company, or you can approach them, or any consultant. They can give you support. And a lot of Indian banks are also giving trade finance. International banks are also entered in India. There are plenty of country-wise export Exim banks are there. They can also support you to import the product, or Indian banks like Exim Bank can support you to export the product.
We have another question from Ravi Shankar KT. He says, I'm not sure of the concrete actions taken by the government to encourage the SMEs and its effect, since the transparency is missing. So what do you have to say about that?
That's not a correct question, because the government is putting efforts. Or rather, I'm happy to inform all of you that even Honorable Prime Minister of India invited me in last December, 2019 December, to understand the problems and issues of the SME sector. and he spent 3 hours with us. So look at in 3 hours, he understand what are the initiative to be taken, what are the facility to be provided. And therefore, you must be seeing that in last March, when the pandemic started, the first announcement made by the government for SME sector, and that was a huge support for the SME sector. Nevertheless, they have not given the direct funding or financial support, but whatever support they had given, that is a enough support during that time. Now even we have approached the RBI and the government of India that they should support us to get relief from the next 3 months or 6 months, because this second wave of the pandemic is impacting to our business.
Thank you. Thank you, Mr. Chandragant, and thank you, everybody. Let us now welcome on board Ms. Maham Siddique, the Regional Marketing Director and Vice President Commercial at Tradewin Finance, who will present on the transforming challenges and opportunities in this industry. Please welcome Ms. Maham.
Hi, everyone. Thank you. Am I audible?
Yes.
Okay, great. And I'm just double checking to see if you can see my screen, my slides.
Yes.
Okay, great. So hello, everyone from Dubai. I am Maham Siddique, Regional Marketing Director for Tradewin Finance for the Asia region. It is my pleasure to welcome you to the first India Trade Review. Today, we welcome our audience and fellow speakers to recognize and support Indian industry, understand trade developments, and how the trade finance community comes together to support India in this post-pandemic world. So before I begin, I would like to say that the global pandemic has challenged health systems all across the world. And of course, the best way to overcome that, overcome adversity, is to unite and defeat this dreadful disease together. Our hearts go out to the Indian people, and we wish your loved ones a very speedy recovery from all of us at Tradewin. So today I would like to take you through a few points, the challenges that we faced, the strong base with which we begin the year that sets the precedents for years to come, and an overview of the general credit environment across the board as well as in India. So let's talk about how financial institutions, the business community, and regulators all tango together to solve certain challenges. So just to provide you with a brief recap, India faced 8 consecutive quarters of decelerating growth because of a shortage of liquidity and sluggish demand for quite some time. And then the pandemic struck. So at a firm level, those who were agile and had the cushion, they set up their local subsidiaries in target export countries or leveraged the power of e-commerce platforms well in advance. So in the wider business community, however, we witnessed a complete breakdown in the supply chain. So procurement of raw material became a hassle. If raw material was available, there were labor shortages. If there was labor, there was no demand, there were no requests for new orders. So a large number of businesses operating in global supply chains, particularly textile and auto industries, they witnessed a reduction or a complete exit from the banking system. So these shifts in the global markets all had one thing in common. There was a move to secure alternative methods to source as well as distribute. And of course, as uncertainty looms, accessibility to cost-effective financial instruments remains a question mark. However, in the alternative trade finance arena, opportunity actually beckons. So given the importance to the world economy, India actually was one of the first markets to open up since the lockdowns were implemented for the first time. So this was despite the glaring question mark about the rest of the world, where there was a continuing supply-demand mismatch. despite that, India chose to open up, and that's obviously because its fundamentals remain strong. And it opened fastest for a good cause. India's exports stood at $313 billion last year. And this year, it recorded 93% of that at $290 billion. So we're looking at strong chances for consistent growth going forward. I mean, numbers don't lie. So fintech and healthcare witnessed the most interest in terms of foreign investments. But unfortunately, if you look at it in the perspective of calculating it as a percentage of GDP, that has been stagnant around the 2.5% mark for the last 5 years. So, but just to contextualize, we should bear in mind that this is during a time where countries looked inward and anti-globalization, that sentiment was coming to the fore. So as Mr. Suvid had elaborated so well regarding the reforms on the production-linked incentive, or the PLI scheme, there's enormous potential to shift global production to India to make it an export hub for mobile phones, cars, electronics, pharmaceuticals. Foreign companies will look towards India with renewed interest, especially when they're diversifying their supply chains and their investments. So COVID actually exposed some of the pre-existing conditions of a lot of economies. So reforms meant for then are now being implemented now, and of course with a lot of urgency and with vigor. So as is the case anywhere in the world, government spending is a significant component to boost production, consumption, and job creation. To address concerns around liquidity stress, one of the most significant proposals in the recent budget that was announced is to divest 2 public sector banks and 1 general insurance company, which when you think about it, it immediately translates to competition and efficiency. There are also simultaneously some very bold steps that are being taken in increasing non-resident Indian business setup opportunities. So simultaneously, you have Atmanirbhar Bharat, which is self-reliance. That is on the basis of strengthening supply chains, which while focusing on domestic industry, which at the outset it sounds very contradictory, but it is actually based on the premise of facilitating MSME business capacity, Indian MSME business capacity. So if certain goods can be produced and consumed domestically, and then further exported globally, why not play on these strengths? Why not support and nurture these strengths versus allow for them to be choked? So the Indian business houses will benefit most, but give it some time, because at the moment we're seeing Atmanirbhar breaking down at state level, especially because of oxygen supplies, the urgency of the situation brought on by the pandemic. But just like any policy that is introduced, there will of course be some teething problems to begin with, but there will always be scope for adjustments and improvements as we go along. India has, from a job perspective, from a manpower perspective, India has one of the largest workforces in the world. So they have 500 million people of working age. We have a generation that was born in the Y2K era, coming of age now, and they're moving into their first jobs. We have young entrepreneurs in their young, their early 20s, their mid 20s. They have a certain sense of vibrancy and positivity. They have a can-do attitude. So India alone produces 1.5 million engineers every year, which is more than China and the US combined. So that means it can reap the rewards of this demographic, not just from a human capital standpoint, but there's also a very great consumption boom around the corner as well. So that said, you have technology and talent, they will remain important factors throughout. In the context of employment, yes, there are a lot of people that are shifting to rural areas, but just to put into perspective, 70% of the population lives in the rural areas, and as jobs are facilitated, this will have especially with announcements of the mega textile parks and the setup of new factories, such as the likes of the Samsungs and Apples of the world, this will provide positive opportunities. It'll have a direct bearing on job creation, which is really something to be proud of. Now let's talk about the financing. Let's talk about financing the engine behind all of this progress, which is the MSME business community. The pre-COVID, the global finance gap stood at $1.5 trillion. In December 2020, that grew to more than $5 trillion. That means currently that there are 200 million businesses worldwide that need financing to invest, grow, and create new jobs. These businesses, they account for half of global GDP and 2/3 of jobs worldwide. And SMEs that are engaging in trade, that are actually very active in global trade, they're sitting on over $15 trillion worth of receivables. So if you do a little bit of assumption, a little bit of calculation, there's a possible credit gap in the area of about $9 to $10 trillion as we speak. And that gap grows with the passing weeks and months. Of course, because of a variety of factors. You have regulatory tightening, you have KYC and AML requirements, and you have a lot of de-risking by banks. So in India, you have over 60 million MSMEs that are facing a credit shortfall of $400 billion. So it's quite clear, quite safe to assume the SME problem is not solved. It has not been solved, and that's what this discussion is about over here today as well. India's MSME base is actually the largest in the world after China. They account for 30% of India's GDP, 45% of India's total manufacturing, and 40% of India's exports. Large firms tend to be more politically connected to the emerging markets. There's no secret in this. And because of that, they result from better access to bank financing. Funds are being enjoyed by the larger, better organized players. And while there are banks and credit agencies that have implemented and do cater to MSME community, they have special lines of credit for them. This is actually a very small proportion of bank business, realistically. So let's talk a little about the drivers of trade finance rejections. The first issue is the trade finance transaction itself, which is the risk and profitability related to the deal. We look at over here counterparty risk, transaction volume, so on and so forth. The second issue is a general reorientation towards lower risk markets. Due to regulatory compliance, a lot of conventional lenders find it a lot more feasible and commercially viable to move into lower risk segments. And that's where we recognize that rejections that fall into this segment have a greater potential to be addressed in the short to medium term by newer institutions that are moving in to cover such markets, particularly these kind of markets that have been left underserved. So fintechs and alternative trade finance lenders come in to plug this gap. And while the opportunities are increasing, there is increased awareness, those gaps remain. There is, that could be because of reduced insurer support or bilateral banking arrangements where a lot of lenders are constrained by their own funding sources. So that sometimes tends to be the banks themselves. And therefore they have no other option but to remain within their own funders' appetite. The third driver is the due diligence on proposals. So trade finance generally is taken for granted in more developed, industrialized countries because importers and exporters are backed by more mature financial industries. In developing countries, however, requests for trade finance are more likely to be rejected. A lot of traditional banks use corporate banking or consumer banking models, which typically don't translate well when they are applied to MSME business. So typically, we're looking at a lack of reliable data, a lack of collateral coverage to hedge those perceived risks. In developing countries, it is estimated that 75% of MSMEs they secure their funding sources from informal sources, such as funding from friends and family, business partners, loan sharks, and local traders suffer the most in this area. There is limited access to knowledge and skills that are needed to handle trade finance documentation. which is considered to be essential parts of the loan application in a lot of banks. The quality and reliability of such statements varies. MSMEs, they lack, a lot of them lack technical knowledge for preparing that kind of financial information that is required to successfully have, those successfully pass through those loan applications. The bulk of trade finance gaps are as a result of bank decisions as well. But the solutions also remain unanswered by those very same institutions. And that sort of environment actually creates a very sort of vicious cycle for a lot of businesses. And we need to find a way to stop that vicious cycle. To address this, we have some immediate solutions at hand. One solution is that there must be increased capacity building amongst trade finance departments within banks. So people that are better suited to dealing with large corporates are not suited to dealing with SMEs. We can of course address this through adequate training, exposure. Things are changing. There's a lot of new players in the market. There's a lot of trade finance platforms and factoring companies in the market. They're figuring out how to help MSMEs. They've basically unbundled bank products to serve them as standalone products, and they're serving those products very well. The second solution is leverage on big data. Everybody has a digital footprint at this point in time. You have a lot of e-commerce platforms out there. You have Amazon, Google. They have all of the transaction and payment details available to a certain payment activities. You have shipping platforms as well. They help you a certain critical shipment data as well, and sometimes in real time too. The third solution, which is well underway, and it has been for some time, is the move toward privatization of certain banks. So, coupled with the increasing weight of specialized lenders coming to the market, there will be increased competition. Despite that, I think the change will take some time because banks are still really in the far left when it comes to making structural, cultural changes. And in contrast, you have smaller challenger banks, you have these factoring companies, you have specialized lenders who are a lot more agile when it comes to responding to market developments and market trends and trade trends and to meet their end client needs. And non-banks are, I would categorize these are all non-banks. Non-banks are making the biggest strides here. So even though they don't have easy access to capital the way banks do, we're seeing a lot of breakthroughs. These non-banks account for more than 16% of the credit that has been extended to MSMEs in the last year. So of course, on account of greater financial inclusion, more awareness, and an understanding of business models these days, this number is projected to rise to 23% in the next 2 to 3 years. And the base is quite strong. So you have about 350 alternative lending startups in India alone. And you have foreign factoring companies as well, such as Tradewin, who bring with them a specialized knowledge of underlying business that is probably difficult and sometimes impossible for traditional financial institutions to replicate. The government needs to unleash them, allow for them to flourish into the MSME space to help bridge that gap. So a proper environment will allow for these firms to compete and then also create scale. So that said, India remains finance's fertile ground. So if you're, my advice is to the business community, if your current provider isn't doing the right things, they're not, for example, they're not providing you with financing, or they aren't at least providing you with the advice that will help you to at least get that financing, find somebody else. They are, because there are people that are actually looking out there for you specifically. So I would like to conclude that it's a $12 trillion US market globally if we were to include both formal and informal businesses. And in India, a $400 billion market as we speak, that grows. And we need to solve this problem. So it's not just going to be banks or just the fintechs or alternative lenders. It has to be the regulators, the government, the large corporations, the whole financial ecosystem needs to come together with, they all have to have hands on deck to solve this inclusion problem. So Tradewin recognizes and appreciates India's expanding manufacturing capabilities, and of course the associated financing requirements that go hand in hand. So our aim is to equip businesses to broaden their footprint and sharpen their competitive edge through receivables finance solutions. And just to give you some context, over 90% of our own portfolio centers around the needs of our clients that are based in these emerging markets. So this includes India, Pakistan, Bangladesh. So that's pretty evident, and we're looking to deepening that commitment as well. So that said, if anybody has any questions, please do let me know.
Thank you, Ms. Maham. It was an interesting presentation and extremely informative too. Let's now see for any questions from the audience. We'd like to know how a private finance institution like Tradewin helps exporters of India.
Okay, that's a fairly straightforward question. So I'm not going to get into the nitty-gritties in terms of the process flow and whatnot. That's something, of course, we can take offline. And it's the beauty of being an agile, specialized lender is that we don't paint all of our clients with the same brush stroke. So we identify the documentation that you have. We look at the industry that you're working with. We look at the buyers that you're working with. We study your business requirements. We understand your business goals in the short, mid, long term, and we assist you in terms of providing you with the insurance to safeguard your business, and then we also extend the financing that comes along with it. So we bridge the payment terms between yourselves and your buyers, and we also secure those transactions. So in case there is any sort of protracted default, any sort of eventualities with your buyers abroad, we can help you cover that risk. And consider it almost like a trade finance partner. I wouldn't even use the word lender. We're a partner because we would assist you with taking risks that we are also comfortable taking. So in a nutshell, that's effectively what we do. And of course, if you have any sort of queries, questions regarding how we can help your business, please feel free to email us. And what we can do is we can connect you with the right people on the ground. We have immense feet on the street who are very much aware of the market developments and the market requirements. They can sit down with you and have that discussion, that intimate discussion with you to understand how they can help you with your business.
Thank you. We have Mr. A.K. Sharma who says, "Hi Maham, due to COVID, Indian MSME is confused on financing model as importers are not cooperating on factoring solutions as they are not signing consent letters. So what is your take on this?"
So I think the situation is as such where a lot of the counterparties may or may not be comfortable signing on those letters, those consent letters, those notice of assignments, those introductory letters, maybe because there could be a variety of factors. One is maybe they're not comfortable. Maybe you're not a crucial supplier. That is a reality. Maybe you're not a crucial supplier. If you are an important supplier, yes, they will sign on the assignment because they need those goods to be sent to them, number one. Number two, maybe they're not familiar with that particular financial institution. They make the payment tomorrow. The supplier, the manufacturer can say, my lender is saying that I didn't get the funds. Maybe the lender has, he's sitting on the funds. Maybe he's just decided, okay, I will not pay. The visibility and transparency of the lender is also very important. So of course, when you have those 350 startups in India right now, not everyone could be viable for you. Maybe they're not well known in the larger trade ecosystem. Tradewin has been in the market for the last 21 years. So, there's a credibility there, there's a visibility there, there's a brand awareness as well. All of these factors do play a part, they do play an importance. Maybe the buyer, maybe the counterparty that has been referred to, maybe they have had their fingers burned in the past. Maybe sometimes you can have your lender also speak to them and you can have that tri-party discussion, and we can assist the buyer, the counterparty, with understanding what the benefits are for them as well if they were to sign on such a letter. So it's a very broad topic, and again, yes, we can assist in this regard. Not an issue.
Thank you. We have Rajat Mittal, who says, will factoring companies be able to fund an SME at an initial stage on the basis of a confirmed order on pre-shipment? Because the problem with any SME is to get initial business financing to get started.
Understood. Hi, Rajat. Thank you for your question. Yes, there is a possibility, but as I said, again, it's a very broad spectrum, a lot of factors to consider. We sit down with the client, with the prospect, and we understand what the financing requirement is exactly, what the payment terms are, at what stage will the shipment be made, what the Incoterms are, how risky is the transaction. Yes, it is possible to conduct that sort of a facility because we have done it in the past. We are doing it now as well. But we have to understand what is the trade, what is the product, who are the counterparties, who is the client. It's everything. We have to study it, in a very holistic manner. But yes, it is possible to do this. It is possible, and we do this.
Thank you. We have Mr. Ravi Shankar, who says, we have a loan taken from a domestic banker for equipment financing. Now, the banker is not supporting for working capital. Do you think you can support us on the working capital? This is more of a business-oriented personal question. Nevertheless, if you could shed some light on the same.
Not an issue. So a lot of the times, yes, a lot of the profile that we have coming to us, a lot of instances we find that there are companies that have existing lines with their house banks, their conventional lenders, and let's say they have a variety of working capital facilities, but they don't have the collateral to securitize their deals. They don't have the collateral to give additional comfort to the banks. An alternative lender like Tradewind or a lot of other factoring companies, what they do is they provide facilities on non-recourse basis, which means that the security for us in this case is the counterparty signing on the consent form, us receiving the payment from the counterparty. So that is effectively our security. We will not be asking for fixed assets. We will not be asking for term deposits to cash collateralize your facilities. But yes, it is possible for us to look into trade finance facilities for a company that is working with a bank as we speak, or multiple banks even. And it is technically considered offshore lending. It does not reflect on your balance sheet. In fact, if anything, availing such a factoring facility can even alleviate your balance sheet concerns from an accounting perspective. We can get into that later. We can have a discussion offline as you like. But yes, it is possible. We look into it as well. Yes.
Thank you. We have someone, an anonymous user, asking, how much time does it take to finish one round of deal?
One round of, sorry, please?
One round of deal.
There's some things that are in our hands and there's some things that are not in our hands. Of course, one is what is the turnaround time of the client to submit the documentation that's necessary for us to assess. Of course, the buyer signing on the consent form, that takes time in certain instances. But if you look at it from an internal turnaround time, it does not take that long. We have a 48-hour turnaround for funding the transaction once the client has been onboarded and the buyer has verified that the goods have been shipped and are in good order. Our turnaround time for approvals is very minimal. I would suggest, it can even take 2 weeks. It can take 1 week, depending on the complexity of the documentation and the ticket size as well. It's not. The duration cannot be fully committed. It is because we are dependent on the client providing us documentation, then of course the buyer also signing on that consent.
Thank you so much for that. We have Vinod Wasan, He says there are many non-Indian registered factoring companies offering loans. Now, is it safe to avail from them?
Interesting question. Is it safe? I cannot comment because there are so many of them. I can tell you about Tradewin. We're 20 years old. We have that repute in the market. We are stationed in 20 countries. We have a very solid workforce, and this is basically our bread and butter. So I can tell you about us. Yes, it's safe to take it from us. I cannot comment too much about the startups or the newer guys, the new kids on the block. Because some factoring companies have that credibility and they have that bilateral banking arrangement. They have the trust of their own lenders as well, banking lenders. And then you have these startups that have the capital injections, and they're very new and they boast a lot of agility and speed, and they make it seem like it's really easy. And of course, anything that is very easy comes at a price, and sometimes it may be too good to be true. So I would definitely recommend doing some due diligence and doing some homework of your own. Anybody who promises something, over-promises something, most likely will end up under-delivering. So that's just my 2 cents.
We have Srihari Belur. He says, can you look at exporters from Africa to Europe and USA markets?
Oh, absolutely, yes. Yes, we can do that.
And then we have Rajat Mittal again. Rajat is asking us if someone has taken an ECGC insurance, will they still need to take insurance through Tradewin?
Yes, that will be necessary. But ECGC is, is a domestic insurer, and we are a global player, and we deal with the likes of, our counterparties and banks and clients that are stationed in emerging markets, as well as the more developed markets. So we have insurance policies in place that cover a variety of localities, and of course, because we're an international financier, we would have the support of international insurers as well.
We've got the last question for you, Ms. Maham. It says it's from AK Sharma, and he wants to know, what about seafood exports to China? Because some customers are not able to get any credit.
It depends on, of course, yes, it is an industry. In fact, one of the largest portfolios for us in terms of exposure is seafood export. So we do a lot of meat export, seafood export. In terms of F&B, we do a lot of that. And yes, we do fund transactions for seafood exports. But yes, we have to study, of course, who the counterparty is, what sort of risk are we talking about, what sort of payment terms are we looking at. Yes, it is something we can look at, not an issue.
Perfect. Thank you, Ms. Maham, for answering all our questions again. It was an interesting presentation, and thank you everyone for your questions. We have our anonymous user again who says, dear Maham, amazing subject knowledge, and thank you very much for the presentation. One last question. It's from Vikas Soni. He says, we are exporting IT and software services. So what type of insurances should we buy?
So if you're looking at insurance, I would suggest, of course, looking at one of the global players. We are talking the likes of Coface, Euler. Euler is one of the largest in the world, Allianz Group. I would suggest looking into that. If you're only looking for insurance, I would suggest a larger player, because of course they have the intel, they have the knowledge of what's happening in the target markets that you're looking to sell in. And of course, another aspect of our portfolio, our funding aspirations, is that we are deepening our exposure in India, and that is, not just apparel manufacturing or pharma. We're looking at auto, and we're looking at IT services as well. We have a portfolio there too. So if you would like to have that discussion offline, we can do so.
Great. Thank you so much, Maham. I know there was a sea of questions, and thank you for your vast knowledge in helping us through this. Thank you, everyone, for your questions. Now, before we begin, I would like to thank our supporting organizations once again. So a big thank you to the Government of India, Ministry of Commerce and Industry, Office of the Additional Directorate General of Foreign Trade, Ludhiana, Federation of the Indian Export Organizations, SME Chamber of India, Trade Promotion Council of India. And we would also like to thank our event partners, Tradewind Finance, Saxo Group, Vivanta Capital, ICT Circle, TradeStream, EuroExim Bank, and India Factoring. Let us now move forward to discuss some captivating topics with our panelists. Our first panel topic will discuss on the impact of COVID-19 in the trade finance industry. Now we welcome on board our panelists, Mr. Zohail Zali, Regional Commercial Director and Managing Director of Bangladesh and Pakistan at Tradewind, Ms. Manpreet Kaur, Founder and CEO of Vivanta Capital, Mr. Graham Wright, Head of Compliance and Operations at EuroExim Bank. I will now hand over to our moderator, Ms. Maham Siddiq, the Regional Marketing Director and VP of Commercial, Tradewind Finance.
Thank you. So I'm very confident that we'll have a very lively discussion. So let's move forward. I would like to start with Ms. Manpreet. Ms. Manpreet, you are closest to your clients in terms of understanding, their financing requirements and finding the right solutions. So on the basis of the opportunities that come to you, what do you feel are the characteristics of trade finance in India and globally, particularly since COVID has begun? So just like a brief overview, perhaps.
Sure. So Maham, first of all, congratulations. I think your presentation was beautifully covered. A lot of the points which I wanted to talk about are already been spoken about. So to answer this question, I'll break it down into pieces. I'll talk about COVID impact on India in trade, and then how the economy has revived and what is now going forward. So I step back to 2020, March to May 2020, India witnessed the largest lockdown in the world. Factories, businesses, offices, everything was shut down. Now, the export and the import took a massive hit during that period. Our exports declined to almost about 35% and imports declined to 28%, which means there's a huge amount of trade finance gap and the general working capital finance which had emerged in that period of time. Now, having said that, when the lockdown opened, what is it that we were witnessing? We witnessed that the labor population had majorly migrated to their villages, their hometowns. So obviously there was a lack of manpower. We witnessed that the factories which were wanting to come into operational capacities perhaps did not have the raw materials or did not have the working capital to procure raw materials, because for a longer period of time they were shut down and they had to actually put the bills, but there was nothing which was coming in as cash flows. We witnessed that even if they were wanting to take financing from the local banks, while the local banks had liquidity, they were surplus with liquidity, but they were really shying away to lend at that point in time. So these were the impacts which were happening. We also saw a lot of delinquencies coming up. We saw a lot of NPAs rising up during that time. Hardest hit have been MSMEs, because on one side, they have to pay to their suppliers to procure the material. On the other side, they have to receive from their debtors, right? And they were the ones who actually got badly hit because of the lockdown and because of the COVID situation. Now, moving from the operational aspect of COVID, now let's move to the financial aspect. What is happening in the banking world or the financial world in post-COVID or current COVID situation? Now, force majeure is one clause which we have always talked about, but this is one situation when force majeure was actually activated. In terms of our export contracts or any domestic contract also, we saw a lot of buyers actually using this, or even a lot of suppliers using this as a caveat to get out of a contractual obligation. So I'm sure even Tradewind as an organization, since you support a lot of export receivable, you might have also faced this, that this was one of we saw a lot of rampant increase in contractual obligation not being followed, be it the payment obligation from the buyer side or be it the performance obligation from the supplier side. And both of them probably might have their genuine reasons to back off. We saw insurance market getting very, very squeezed. We saw that the capacities which were there earlier pre-COVID world had drastically come down in terms of capabilities for underwriters to underwrite that insurance cover. That insurance cover can be for a sovereign or even for a corporate. And we also saw the cost of insurance drastically rising up to cover or mitigate that risk. In terms of banks, the trend for India right now is that a lot of the MNC banks are actually, they have stopped onboarding any fresh client. They are very happy to do lending to their existing portfolio, but they are completely mandated not to onboard any fresh clients. Having said that, now this is a grim side of financial industry and market. What is the silver lining to the dark cloud is that the emergence of these alternate financing providers. Like Maham, you also mentioned in your presentation, the rise of the fintechs. We saw the rise of factoring companies. We saw the rise of alternate financing funds, trade funds, hedge funds, who actually took this as an opportunity to provide solutions which are around trade finance, supply chain finance, and a new thing which is structured trade finance. So from a traditional trade financing, which has historically been receivable financing or payable financing, we saw a new emergence of asset class, which is structured trade financing. Because the risks that we used to see pre-COVID were very lopsided towards probably a liquidity risk of a counterparty or a commodity risk of an underlying trade. But now we are not even dealing with those, we're dealing step ahead of that. We're actually dealing with the sovereign risk. In past 1 year, we have seen many countries which have defaulted. We have seen countries in Africa like Zambia, there have been a Eurobond default. So it's also about the sovereign risk. How is a sovereign going to perform? You know, we're talking about the performance risk. Earlier, we never doubted the suppliers, even if they had a good credit standing or a relationship between supplier and buyer. But now we're actually doubting the capability of a factory or a supplier to actually have that wherewithal to manufacture and supply on time. We are seeing systematic risk. We have never had the question of a going concern ever in the history. This is the time when we are actually asking whether this organization will exist for coming months or coming years, because in the past 1 year, we have actually seen a lot of companies have declared bankruptcy voluntarily, or they have been taken to NCLT through their creditors, right? So the very existence of the companies are currently under question. So this brings a lot of systematic risk in the trade finance market. There's a high risk of liquidity. Obviously, there's a high risk of default, which is their performance. So everything in terms of risk assessment, when a lender is sitting on a particular case, they have to actually see everything, you know, which was probably earlier was not a perspective. Now, coming with that, obviously, there have been operational challenges because even the bankers are not going to offices. They are sitting in their homes. Working staff is not going to office. Everybody's sitting in their homes. So there's a lot of operational challenges, which has made the process of lending a little bit slower as compared to when pre-COVID world. Now, this is all the reality that we have faced in 2020. Now, what has happened? The brighter side of this is complete digitalization. Not even the banking sector, the non-banking sector, the industries, the corporate, even the MSMEs, everybody has realized they want to move from a paper-based economy to completely a no paper economy, you know, right in terms from signing the e-contract to having an e-invoice to having bills of lading, which are electronically signed. So all of that, I think, it's a very big bane, which I will say, which COVID has probably caused, that the mindset of every individual is right now supporting digitalization, you know, something which there was a change management issue. People used to resist this change, but now they understand the importance of sitting on their laptop and managing everything which is digital, right? So that has been a very big bane, I think, because of whatever happened last year. Also, in terms of alternative asset class, when I say even banks are being a little bit risk, you know, they are being very conservative to risk, but then there are these hedge funds, there are these trade funds who are very actively now looking at trade finance asset as an asset class. They might not be doing a primary lending, which means they might not be lending to a counterparty directly, but they might be acting as a funds of funds. They may probably try to fund an existing factoring company or an existing fund, which is already having a portfolio of trade finance. So that is again an asset class which is emerging, which is completely a transformation which was not there earlier. And in the end, what I'd like to probably say is summarize is that every crisis comes with it bringing a lot of opportunity. So while we are battling a gloomy environment, we are facing job losses, there are loss of our loved ones. At the same time, I think it's a time to pivot. It's a time to be agile. It's a time to think about different business models. And there are things which you could do in a different way to come up and brave out the situation. So a long answer for your short question, Maham.
Yeah, thank you, Manpreet. Thank you. Excellent. Thank you for sharing. I would like to take this over to Mr. Graham now. Mr. Graham, it's no secret that household consumption patterns have changed. Transportation is deeply affected as well, and retail business, of course, has taken for the worst. How do you see the shift in direct demand towards consumption of goods going forward? How do you see the shift going forward now? What do you see?
Well, thank you very much for the introduction there. So I'm Graham Bright. I'm based in London, so it's now nearly 8 o'clock in the morning. Welcome to everybody in India. And again, we hope everybody is safe and well through this appalling time and hope it's going to be resolved as soon as possible. From our perspective with EuroExim Bank, we're a trade finance specialist. We provide the instruments for the SMEs in particular in order to do their import activity. Now, what we've seen at the moment, for example, from the United Kingdom and the other areas in which we operate, again, through the COVID period, many people, again, have not used transport in the same way they have. They're not using buses, they're not using trains, they're not paying for those particular services. So in the UK in particular, we're seeing a huge amount of domestic capability and holding of funds, which is almost ready to go back out into the market whilst we've had lockdown in those markets. Our essential shops have been running for some time. Our non-essential shops reopened last week. So from a period of almost no sales in the commercial market, we've seen a startup, very much people wanting to go out, start spending money that they've accumulated in those pots. The issue is that as far as trade is concerned, trade has continued. There's no doubt that international trade has still gone on. And from our perspective, we've seen an increase in the number of clients coming to us where there has been a decrease in their opportunity to work with larger institutions who have been de-risking, merging, and literally taking away the opportunity because of low volume and higher risk perceived in order to do international transactions. An excellent point just before was lack of liquidity in those markets. We deal with Africa, for example. Domestic banks are not supporting small institutions to help them with import. And again, that great question, are those industries or are those companies going to be in existence in 3 months' time, 6 months or 12 months when you're looking at a 360-day instrument? So we've got to do our compliance, our due diligence, our work with those companies. And exactly as said right at the beginning, we can assist those companies to ensure things are in place, but we must not stifle entrepreneurial flair. We mustn't stop the small companies from taking the opportunity to do export and import in their particular markets. So we are seeing continued trade finance activity. We believe that there's going to be a greater increase in that. Certain industries have not been challenged at all. So from the point of view, food, drink, and other industries, in particular, chemicals, PPE, other type of industrial goods, pharmaceuticals. So for perhaps the wrong reason, their goods and services have been on the increase throughout the whole time of the pandemic. But we are going to see more raw materials coming from Africa at a different price. The Make in India is going to be certainly a big factor coming up. But one of the other key factors is how goods physically move between different environments. Remember, if we're moving goods from Africa to India, it's almost the equivalent of moving from Kerala in the south of India to the north of India in terms of physical distance sometimes. So we've got to be very careful when we talk about going across state, across country, across landlocked countries to a port, for example. And we still have that problem of local liquidity and the cost and sanctions as you move goods across border. So there are issues, very big issues there. We know there's a limit in the way of support is offered to small companies. We know the capital is very much stifled at the moment. And we need to find appropriate collateral for the smaller SMEs to actually build their business. Because we believe that it's not the governments working with ECAs or other big infrastructure projects, but the SMEs who are going to drive recovery in each of the economies. So it's very important that we support those particular institutions. We already work with the SME Chamber, for example, and aware of alternate financing, because we provide the instruments. We don't do the physical financing of that transaction. So it's very important, again, that we look at the documentation to ensure that all the parties in the transaction, of which there are many, all are working as one collective. Another very good point was made regarding the digitization of documents and the moving to digital. And we believe also that by implementing a technology enabler, such as blockchain in our environment, that we're then able to move the information in a much smoother way, a much faster way. We can handle the compliance in a much faster way. We can onboard clients in a better way. And hopefully that will also promote international trade. So things are not on hold. All we see now is hopefully, as you say, the UK is moving out of lockdown in the second part of that lockdown, that trade is improving. Things, of course, were not helped by a little blockage in the Suez Canal. So we've also got to look at other man-made issues as opposed to perhaps a more natural cause there. And we've got now containers in the wrong part of the world. We've got goods waiting for raw materials to arrive in other parts of the world. So we've still got a catch-up period. But apart from that blip that we had last month, what we're looking at still is being able to support smaller industries on the import side with letters of credit, on the export side with financial guarantees and tenders. But remember, we believe it's not just the large companies, the international companies, mega companies who are going to drive growth for the future. It's the smaller companies, it's the smaller entrepreneurs being able to get hold of the right level of financing to make sure that they can provide the goods and services and promote the economies moving forward.
Wonderful. Thank you so much for the detailed insights, sir. And for both ends, the banking side as well as for what the exporters must consider. So I would like to take this over now to my colleague, Mr. Sohail Zali. Sohail, you have a bird's eye view on your region, and that includes India as well. You look at the commercial activities over there. So in terms of trade behavior and concerns, what do you believe is in store for India when we speak of future trade opportunities?
Yeah, hi Maham, thank you very much. Hi everyone. So I actually want to touch base a bit about the COVID impacts on the trade and the future in India. Mrs. Manpreet already touched base a bit about the impact. But first of all, we all know that the pandemic has a significant impact on the economy and the trade globally. And when we look at the India sector, it is significant to look at the GDP forecast. When we see that, for example, the World Bank already forecasts a 9% GDP, minus GDP for India, where the State Bank of India already forecasted -7. When we combine service and merchandise and focusing then on the trade deficit, we can see that from the last year, April to March 2021, where we are now, the trade deficit in India was by $14 billion US, where compared to the last year, the trade deficit was 10 billion in 2018 and 2019. In order to understand better the impact, let's look at just the GDP sectors. On each sector in India, we can see a negative trend in the hospitality, of course. Then we see the trend, negative trend in construction and real estate, and followed by manufacturing. Manufacturing, of course, we see a bit more a positive impact in Q2, since the European countries, US, are rolling out the vaccination much more stronger. We see that the lockdown getting eased. So we have a hope that the manufacturing, especially the apparel industry and auto parts industry manufacture increase. in Q2. The only sector is actually which has a positive impact, and we see a positive trend, is the agriculture. Agriculture has a positive trend in we see for the Q1 and Q2, of course, but the pandemic is expected to affect the agriculture market over the next decades, and since slower economic growth has actually an impact on the food protection, food production, formal livelihood, and greenhouse gas emission. Having said that, we saw actually a positive sign and signal in March, where the export actually increased to 60%, and the import increased by 50%. Unfortunately, we're not gonna see, I believe, the trend for the next couple of months, since we enter in India in the second wave. Thank you.
Thank you so much, Sohail. Thank you for that. That was very interesting. Ms. Manpreet, I'll come back to you. Your company, Vivanta Capital, is, it supports trade finance requirements for clients in India as well as globally. So your company is a startup MSME itself. So may I ask, how did your business specifically respond to the crisis? What steps would you recommend, would you advise other MSMEs to consider? You're on mute, Manpreet.
Sorry, can you hear me? Yeah. So like I was explaining, that because of the lockdown, everything was shut down, and obviously the trade finance, which is our core activity, because we are currently an offline platform and we are offering supply chain finance, trade finance, and structured trade finance to clients all over. Now, what do you do if the trade is not happening, if everything is in a lockdown situation, right? Our main business is absolutely impacted. And during that time, being a startup, we actually pivoted a model. So we figured out that apart from a conventional supply chains of commodities and goods, there was a new supply chain which was emerging. And those supply chains were supply chains around medical equipments. There were supply chains around PPE, around test kits, around vaccination, right? And that was an opportunity that we thought is something which is right now here, and it's going to be staying for a long time. So as a model, we actually entered into the distributorship and outreach for these supply chains, and we actually ended up doing some bit of transactions during the time when our core business was absolutely shut down. Having said that, I would again like to say one thing, which is my personal experience as a startup founder. And I think a lot of the MSMEs and even the mid to large companies will probably resonate with it, that this is just not one black swan event. I think we have to accept this reality that in times to come, there will be many such events which might come. So again, we have to think about what is a business model, how agile it is, and how strong it is to overcome any such black swan event in future to come. Obviously, agility is there, the ability to pivot your model. Are you actually putting all your eggs into one basket, or do you have the capability to hedge your business risk if something like this ever happens again, or this period gets sustained to a longer tenure? In terms of your operational, how are you operating? Your entire operations have to get overhauled, because we don't have the luxury now to go to offices. We don't have the luxury to meet clients. We don't have the luxury. Everything has moved to a Zoom. Even this conference is right now happening on a Zoom, which is something which we would have never imagined in the past. So the way business is conducted has completely changed. And the more adept we are to that change is going to be, it's basically the survival of the fittest right now. So it's a survival time. In terms of digitalization, I've already spoken about, and that is not something only the large enterprises are following. I have seen a lot of startup founders, I have seen a lot of MSMEs also who are trying to actually digitalize their processes in their own sweet little way. And I think that is a very good initiative, because this is going to pay them in a very, very long way coming forward. Liquidity is always the king. This is something which our forefathers and everybody had taught us. And 2020 has actually taught enterprises and businesses that their cash flows statement is the most important statement, in terms of how much liquidity they actually have, because there would be some dry patches and some dry runs, which can go into months or into a year as well. How do they survive in that period of dry when there's no revenue getting into the business? So liquidity, again, is the king. In terms of risk assessment, it's not just the lenders, it's just not consultants and advisory firms like ours. I think as a small enterprise, as a startup, even the founder needs to assess the risk. If they're buying from a supplier, what is the capability of the supplier to continue to supply to them, even after being impacted from COVID? If they're selling to their buyers, how good the buyers will be to pay them back. So from a startup or an MSME perspective, I will also request everybody on the call right now, just do not delegate your risk mitigation strategies to a consultant or a banker. Please take the complete control yourself. Sit down again with your accounting team and your finance team, reassess your portfolio, reassess how much percentage of buyer portfolio you have. Are you selling to only a particular client? You have a homogeneous mix of clients. So all of that is a risk mitigation strategy, which every company, be it a mid-size, small size, micro, or a large enterprise, will have to do that. So these are few things: agility, pivoting your model, cash, liquidity, risk assessment, digitalization. So these 5 points are the things which I think are the key takeaway for everybody currently to come out of this situation and to brave it.
Thank you, Manpreet. That was excellent. Thank you for breaking it down to such a granular level for all of us to understand. I'll bring this back to Mr. Graham. Back to you, sir. So this is a burning question for a lot of us, everybody, the trade finance community, and as well as the MSME community, everybody. I wanted to ask you, do you believe that there are any business sectors that have remained and continue to remain unaffected by COVID?
Yeah, I think if we go back to the answer I gave before, certainly chemicals, food and drink, totally unaffected. I think we're going to see also a rise in the number of electric vehicles. So as the manufacturing is going to switch into that particular area because of government policy. In terms of production, agricultural production of food, we're looking at new inventive ways of that industry coming about. Vertical farming, for example, which is providing more quality, more quantity with less effort. One thing I would really make a point on is that in the UK in particular, we're going to have a particular problem coming up from September, and that is the end of our furlough scheme. So where employees have been provided with funds, government funds, to supplement those of businesses. And when that happens, I think what we're going to see is with digitalization, digitizing of documents, making sure individual companies have taken this opportunity to become much more agile through this period, we're going to see very high levels of unemployment coming up. And some sectors of the community, perhaps older workers in particular, already feeling the crunch from that. But we also see a shift towards new startups and the things, for example, using internet services for drop ship services. So it's when you don't actually hold product at all, that you produce a business which is advertising products, which is then waiting for demand, and then you satisfy that demand by directing import and export accordingly. So it's a slightly different model, and we're seeing a number of very, very successful businesses starting with very little in the way of cash flow because they're paid right at the beginning of the transaction, and their obligation is to provide the goods from a particular point in the future. So it's a very good cash flow model. Manpreet's point, absolutely. Cash flow drives the business. And again, what we're doing is very much being sensitive to where the investments are being made, to see whether our clients have the intent and the means to pay, which is the important part throughout the transaction, and also identifying everybody in the ecosystem of trade. Because unlike a payment transaction where I can pay into your account, I need a debit or a credit or a reference and an amount and a transaction account number. Here in ecosystem of trade, we're dealing with 10, 15 different players as we go across jurisdictions, across legalities, across regulation, etc. So it's a complicated business. And I think what we need to be very aware of is that smaller companies do need to take advice from companies like Tradewinds, companies who are available to provide that second level. For example, if you were ill and you go to one doctor and the doctor says one particular diagnosis, you may say, I need a second opinion. And very much in this market, if you're not familiar with these types of requirements, with the export requirements, sanctions, PEPs, AML, KYC, due diligence, if you're not familiar with those and it's the first time you're doing a particular trade, you want to be competitive in your market, go to the advice of experts. And that's what we would really, really try to stress as much as possible in this market. 200 million companies in India. Well, that's an awful lot of business there. And are we saying they all have the right level of expertise and experience to help them on that journey as they start their import or export business? So here, the message very much is experts are there, consult with the experts, take the advice, do your own due diligence right at the beginning as well, and through the transaction. It's not a one hit. Everything we do has to be throughout the transaction. So it's constant monitoring, understanding where the goods are, tracking the ship where it happens to be, understanding who's involved in each part of the transaction. And at that point, I think there'll be much more confidence for smaller companies to actually do that part of business. Even though large banks, for example, BNP and Paribas are pulling out in certain jurisdictions, Citibank, we know, is shutting down the retail part of the business and looking at investment management. Yes, liquidity is hard to get, but there are people specializing in the business. It doesn't need a large bricks and mortar bank in order to get that facility to enable smaller institutions to be competitive.
Wonderful, sir. Thank you so much. That was very insightful, very educational for all of us. Really appreciate that. Sohail, could you shed some light on how alternative financing works, innovative financing, and how would that apply to the MSME community? And if you could also just supplement that with perhaps a case study or like a live example that you're working on as we speak, that would help.
Sure. Thanks, Maham. Yeah, I think this is what we all discussed today was more about that the challenges what SMEs are facing. I think Mr. Graham has already mentioned as well that actually SMEs in India and around the world are facing liquidity crisis, a credit crisis. So what we see is actually, it is not only an India issue, it's actually a global issue from my point of view. And the recent survey has actually shown that SMEs around the world having an unmet demand of $9 trillion US, which actually the low traditional banks cannot meet. So that is actually the issue with which a lot of SMEs around the world are facing. But we see, of course, a lot of SMEs who have actually a good approach, especially in India, where they keep the bank in check and looking to build up new way to build additional liquidity, as cash is the lifeblood. So that is I think that is the right approach. And one way for the growing SMEs to build the liquidity is actually using the factoring as a technique. Factoring can provide the perfect financial solution, which grows as the company grows. So, and let me show you, because there was one question today in the morning. One participant asked how actually the factoring works. So let me give you guys a brief process, a flow chart how a factoring can work, traditional factoring. So basically, the trade finance confirm a limit, provide to the customer of the client, and the limit which the exporter get from the trade finance company, Tradewinds or whoever, he's then able to ship the goods. Once he ships the goods, he actually provides to Tradewinds the documents, and we pay advance 90% and plus the credit protection in case of bankruptcy. What actually the buyer are enjoying here as a benefit is the longer payment terms. So we can talk about 60, 90, and 180 days of credit terms, what the buyers can enjoy. And we're going to have one live case, which actually we recently came to these agreements, which actually during the pandemic, the payment terms increased. So just to go to the final of the transaction. So once we pay to the supplier, their customers pay at the majority date to Tradewin, and we pay the rest, the balance to the supplier. So there's a very short introduction how a trade finance company can work. And allow me just to give you guys a quick case study. Actually, this is a auto part manufacturer in India, and they were exporting to Europe and US. We actually signed these agreements and came as a partner in July 2020. Actually, that was before, and I said that in the middle of the pandemic. The situation was that the debtors actually demanded a credit term of 150 days. And when you look at the pre-COVID situation where the payment terms were 60 and 90 days, this challenged, of course, our clients who has to meet their raw material payments, the fixed costs, and because of the bank lines was utilized, he had a cash flow crisis. So when we provide them a 5 million credit term for the export, and we allow him to export based on 150 days payment terms, that was and backed by the insurer. And as I mentioned before, we pay 90% advance. That actually give the client an improved position in his liquidity, and the additional cash actually channeled back into the company to achieve better growth. Yeah, so that was a very live case, which we actually have in our company, and shows actually the right example, especially for SMEs, how to work with a trade finance company and how to secure themselves with a third-party insurance.
Great, thank you, Sohail. So I just, I think we're a little bit short on time now, so I just wanted to check in if we have any questions from the audience. Just a minute. I think I might need some support with reading out the questions.
Sure. Yes. So we have our anonymous attendee again. The questions: Hi Manpreet, Tradewin, Graham. Just to understand from your experiences, whether the bank or trade finance companies are supporting MSME for exports in Africa, South Asia, South Asian regions without collateral.
Would you like me to take that one? Wonderful question. Unfortunately, we don't do any trades without collateral of some sort. And I'm not sure that any company would be in a position to do that, but I defer to my other panelists there. Everything has risk. And if we're not, even for small amounts, without trust, without confidence, without going through a full due diligence process, we would not be in a position to provide any instruments without some form of collateral, not necessarily in terms of cash or in terms of proof of funds, but in terms of either an asset or something like that which is approved for that particular transaction. But to say, I defer to my colleagues to answer that particular question.
I'd like to take a shot on that. Thank you for that question. Just like I mentioned while I was talking, that the buyer country risk is very, very important. So when we talk about buyers in OECD countries compared to a buyer in Africa or a buyer sitting in South ASEAN, the entire risk perception completely changes in the mind of the lender. So from a risk assessment perspective, if you ask me, it will be a very high risk country to support a buyer. Having said that, I would also like to give good information here that there are some bilateral trade programs between India and African countries. There are also bilateral trade programs between India and South Asian region. And under these bilateral program, there are a lot of lenders and there are support by ECAs and EXIMs, whereby such transactions, if they are in the nature of capex, can be undertaken. If it's in terms of working capital requirement, then there are a lot of these African lenders which support imports coming into Africa or exports going out of Africa. I'm happy to for you to reach out to us at Vivanta Capital. We will be more than happy to guide you through this and to structure this solution for you.
Well, thank you so much, everyone. Now I would like to welcome our next set of speakers and our next set of panelists to discuss on another vital topic. Before that, we just have one last question from Rana Wakas. It actually says, no questions about being agile and digitalizing financial institutions, but are we thinking about the other side of the aisle, the customers? Are they ready to move from paper transactions to e-transactions? And as Tradewin Finance is all about heavy paperwork.
I would like to take this question to answer. So when we look at the customers, if customers are able or the clients are moving, yes, I would say this during the pandemic restriction, organization and even people, I mean individual, shows that they can adopt the rapid changes. So I think with the clients are able to move ahead, even Tradewin, and we are having the adoption of digitalization and moving to more paperless work. So it is something which it does not only depend on the importer or exporter. I think every party need to adopt the changes. Innovation is very important aspect which we have in our future strategy, and that is something what we're going to look into that for the future.
Thank you, Sohail.
Just a very, very quick one on that. Our view is that the clients, if we are onboarding them, it's very much more a paperless online process. So that's becoming much more familiar, and as banks then onboard their own customers with new accounts, etc. And so trade finance is going the same way in the provision of documents and the actual digitalization of those documents and the sharing of those documents. However, the caution I would give is that whilst we would hope for a paperless society, at the moment we're going for less paper.
Thank you, Graham. Well, on that note, I'd like to thank everyone for their insights, and I would like to welcome our next set of panelists to discuss on another vital topic, regulatory requirements and risk mitigation. Now, please welcome Ms. Rakhi Aswal, Chief Financial Officer, India Group Finance and Treasury of Saxo Group, Mr. Jayan Menon, Country Head India, Center of Trade Finance Excellence, TradeStream, and Ravi Valecha, CEO, India Factoring. Now, this discussion will be moderated by Mr. Virat Bahari, Deputy Director, Media and Corporate Communications for Trade Promotion Council of India, Editor for India Business and Trade. Welcome, everybody, and over to you, Mr. Virat. Mr. Virat, you're on mute. I'm sorry.
Yeah. Okay. Thank you for the introduction. I hope everyone can hear me now. Hello?
Yes, we can hear you.
Okay. So hello, everyone. It's my pleasure to welcome you to this very interesting panel discussion. And the topic we are discussing is regulatory requirements and risk mitigation for trade finance providers. So as trade finance providers have become more deeply involved in virtually all international trade, governments worldwide have increased regulatory requirements on banks and trade financiers. In fact, a number of such new requirements have been imposed on trade finance providers in the recent years. Now, since governments and regulatory bodies are enacting these new regulations at a faster pace and updating the old ones, this affects companies and industries who are obviously expected to abide by these rules. And any such sudden changes can cause a ripple effect across entire industry. These rules can increase cost of operations, introduce legal administrative hurdles, and sometimes they can even restrict a company from doing business altogether. In this regard, tariffs, trade policies, and tax policy reforms are some of the common obstacles faced by these companies. Also here, we would like to introduce the second important topic of our discussion, which is risk mitigation. In today's market, the role of the trade finance sector has been to satisfy four key customer needs: facilitation of secure payment, provision of finance, management of sensitive data, and mitigation of risk. But now these services are also being increasingly offered through non-banking service providers, thereby posing a massive threat to this sector. In order to discuss these important issues, we are fortunate to have a very highly esteemed panel with us today, comprising experts in the trade finance sector. So to summarize, just before we start, the essential topic which we will be discussing is as follows. With the changing regulations and complex global business environment, what is the impact we are seeing on the trade finance industry, and how can these challenges be addressed? So first of all, I would like to start with Rakhi Aswal, who's Chief Financial Officer, India, Group Finance and Treasury, Saxo Group. Rakhi, how does your organization manage to keep up with the changing rules and regulations? Also now, with certain countries at risk of recession, we would like to know what are the obstacles you are facing and how are you overcoming them to ensure that the trade keeps flowing? So over to you, Rakhi. Hello, Rakhi, are you there?
I think she's signed out and signing in again due to some technical glitch.
Okay, so meanwhile, Ravi, would you like to elaborate on the challenges which trade finance companies are facing, and particularly over the past year in the COVID time?
Yeah, definitely. So thanks so much for inviting me. First of all, yes, as you mentioned, the challenge is what the trade finance companies, as we've talked about. In fact, the challenges started before the pandemic as well. I would say that, before the pandemic, also the regulations have been tightening. The requirements of AML and compliance aspects are increasing. And now, obviously, these are not increasing in isolation, but these are timely requirements which is happening. We saw situations of high AML and terrorist financing activities in the eyes of trade finance, and that's why the regulators across the world are insisting on stronger guidelines across the banking and financial services sector. And trade finance is not an outlier to that, and that's why being a bigger contributor to the international trade, these requirements have come in across the globe as well, and that's why these challenges are increasing day by day, and that's a burden on, I would not say really a burden, but an increased cost and increased requirements on all market participants, and rightly so, but it is expected to increase further as well. To give you a perspective, last year we had a situation in India it was not in trade finance, but in the retail sector more specifically, where some unregulated entities were offering financing options to the retailers or to the private persons. And for recovery purposes, they were using unfair means. The FinTech Association in India took it up, and RBI also took it up and have set up a committee of digital trade or digital lending capabilities, assessing the digital lending capabilities to assess the wrongdoings of the markets. Now, obviously, this will also have some impact on the on the market participants who are in particularly not registered with the RBI, with the regulators in India. Like most of the banks and non-banks are registered in India, but many of the fintechs, specifically, some of the fintechs are also recognized by RBI, but some of the fintechs who are not within the ambit of the regulations, they can be under scrutiny. So all these puts in perspective the changing regulation scenario in India. And to the point which you mentioned about the changes during the pandemic, now, pandemic has been, it has been a black swan event never seen by anybody within our lifetime. So I would say to a very lesser financial crisis in 2008 gave a lot of perspectives as well. but that was a very small event against what we are seeing today. So definitely there are changes, there are issues which are coming about, and the regulators and other market participants are opening up. The regulators have been quite cooperative and supportive in putting in place the reforms which we heard last week mentioning about the reforms measures across the world issued by the regulators in allowing for a prolongation of the debts and forbearances and various other reforms to see through the transitioning. So these have been impacts which has been seen, but definitely notwithstanding that, there is bound to be some impact on the financial services sector and more specifically trade finance as well.
Okay. Thank you, Ravi, for that insight. So Rakhi,
Hi,
welcome
Parag.
back. Hi,
Oh, I'm
welcome
so
back.
sorry. I got dropped off. I hope you can hear me now.
Yes, absolutely. That's perfectly fine. So Rakhi, how is your organization managing to keep up with these changing rules and regulations? And also, I would like to add, with certain countries which are facing the risk of recession, does this add to the obstacles you face, and how do you overcome these obstacles so that the trade keeps flowing?
Yes, so I think, when it comes to the regulatory framework or the risk framework of an organization, I think there are two major points that should be considered always. One is compliance, and second is how do we meet those compliances very efficiently. Efficiently could mean resource efficiency, cost efficiency, right? So yeah, we are seeing that the regulatory requirements around this whole trade finance, it has been very demanding, right? Last few years, especially after Basel III, what we have seen is that the KYC norms, the AML norms, they have been much more stringent. So we also understand that trade finance is so important for this whole trade ecosystem. Almost, globally, about 80% of trade is dependent on trade finance. But these compliance costs, it's putting a lot of pressure on the financiers, on the organizations, and the profitability itself is under a lot of pressure because of these compliance costs. And a lot of organizations feel that the changing requirements, the compliances, it is making them take tough decisions as de-risking themselves from certain countries itself, especially when it comes to the developing countries where things are still not very streamlined in terms of all of these processes, where the things are still very paper-based. A lot of organizations have actually decided to de-risk themselves from there. And at the same time, what we are seeing is that there are other alternative forms of finance. There are fintech companies which are also entering into this space, right? So I feel that what is really required at this point of time to fill this financing gap, and obviously COVID is also adding to that, is to try to digitalize the whole supply chain. And if we look at the Indian landscape, Indian regulatory landscape, and also the Indian whole trade supply chain, it has always been very, very paper-based. But I think that now with a lot of advanced technologies coming in, things like artificial intelligence, blockchain, and machine learning, those are really going to help developing countries to achieve efficiency and to stay compliant and to be able to meet these regulatory requirements in a much better manner. So I think when it comes to the risk mitigation point, what becomes important is to be able to partner with some of those subject matter experts in terms of understanding the regulatory requirements, in terms of understanding the new compliances around trade and trade finance, and also to partner with these technology partners. If you don't really have your own in-house team, to be able to partner with these technology partners and take full advantage of these recent technological advances. And also, I think that once we are on the other side of of this whole COVID pandemic, what we will really be left with definitely is the importance of technology. And in Indian landscape, again, I would say that things have really gone in right direction. The government has also has shown its intention to move towards technology, towards use of technology. E-invoicing was one of the recent projects by the government, which shows that government is really interested in moving in that direction. So I would say that technology is definitely going to be one of the big factors, along with partnering with the right technology and compliance partners to achieve 100% compliance and efficiency in this whole trade and trade finance framework, I would say.
Okay, would you like to mention any specific challenge which your organization has faced due to some regulatory changes and how you have managed it?
So KYC and AML is definitely different in terms of the requirements when it comes to different countries. It is very very different, very unique, right? But I think we are very much technology focused company, and we in a lot of countries we are basically I would say doing this whole thing paperless, following this paperless journey. So that is, I think, the way to go in the future for managing this very effectively, the whole compliance piece very effectively.
Okay, thank you. Now I would like to bring Jayan in to talk specifically about this shift towards technology and digital processes. So Jayan, what are the risks you have seen which companies face while trading or transacting internationally? And secondly, how can trade finance sectors manage delivery and risk challenges while meeting client expectations using technology? So over to you, Jayan.
Thank you, Virat, and thank you for having me on this panel. I would like to share a small presentation, if it is okay.
Sure. You may do that.
Virat, are you able to see my screen?
Yes, you can see the screen.
Thank you so much. So I will directly go into the presentation. To introduce myself, I am a director and the head of India for TradeStream, and we are into the process of automation of trade processing for banks as well as for large corporates. So many of the words which were used or the concerns which were raised during these 1.5 to 2 hours, maybe some of them we have been able to resolve through the application of technology for trade finance processing. So the problem, the trade finance, one of the points which was raised is whether trade finance is still completely paper-based. The answer to that is yes. Even today, we find that most of the trade finance is analog, it is paper-based and manual, and it is cumbersome. While there is a moment of the world trade to move.
Just a second, Jayan, sorry for interrupting you. Demaira, can we make the screen larger? Because I think the text is not so visible right now.
Yeah, sure. Miss Jayan will have to share the full screen.
Yeah, Jayan, can you share the full screen?
It's on full screen as of now. Let me just do one thing. Is this better?
No. Keep it on full screen. I think Demaira, the Zoom view maybe you can change it. That would help. Just a second. Side by side speakers. Side by side. This is better.
Okay.
Yeah. Yes.
Thank you. So even today, it continues to be paper-based, manual, and cumbersome. While there is a movement towards electronic trade, paperless trade, etc., we have found that across the globe there are very many challenges which banks face, which corporates face when they are moving towards paperless transaction. To take a simple case in India, can we move into a paperless trade as in today? Is there any restriction which has been placed by the Reserve Bank of India? According to my understanding, there is no restriction which has been placed by the Reserve Bank of India to move into an electronic trade. But what would happen if one were to go into electronic trade? There are many ifs and buts. So for example, through the Information Technology Act 2000, we find that the Negotiable Instrument Act has been modified so that a truncated check, etc., is completely acceptable in this world today. But can we say the same thing about a bill of exchange or a promissory note? Probably not. It has also not been tested and tried in the international market. Many of the people are moving into blockchain platforms. Yes, blockchain is indeed a technology which is the future technology of sharing documents, but it is some time away because there are various blockchains which are currently in the process of making, or it has been developed, and there are a certain set of people who are a part of that blockchain. It is extremely difficult as in today to have all the parties involved in trade onto the same blockchain platform and then people sharing those documents on the blockchain platform. So one of the things which we thought about was, while the entire world trade is moving into an electronic platform, moving into an completely paperless trade, we feel that it is some time away till the time that the entire world trade goes into a electronic or paperless sort of a platform. We have to say, apply the logic of the Zen master, it is better to wear slippers on your feet than carpet the whole world. We entered into a process of how we can, thinking process of how we can digitize and automate the entire trade processing in the banks. As in today, if we see the entire trade processing end to end takes anywhere between 8 to 30 days between the exporter and the importer. It gets into the increase of the working capital cycle of the exporter and thereby increasing his cost of exports. One of the things, India is also a signatory to the Trade Facilitation Agreement of the World Trade Organization. As in today, while we are talking about how we will be able to reduce the turnaround time for the exports from India and the imports into India, one of the things is what the exporters and the importers of course face is, how do we reduce the turnaround time for the documentation so that we can realize our exports and import proceeds faster and faster. This is what we have tried to do. This is the complexity of, just to show you the complexity of the document. There are too many documents, too many things to be looked at by the exporter and importer while they are processing transactions. And that becomes a lot of to and fro between the banks and the customers. So what has changed? What has changed that the trade documentation, which has still remained completely paperless, completely manual, that today we are thinking of doing something in an automated and digitized fashion. I would say 2 or 3 things which have changed over the last 3-4 years. One of the biggest change which has happened is, while there was OCR which was there, the application of artificial intelligence and machine learning for OCR is something which has helped in digitizing the trade documentation faster and quicker. The second thing is the usage of natural language processing, which has enabled us to look at very, very unstructured clauses in the letters of credit or even in the collection document, and thereby checking whether these letters of credit and collection document are they in order. To give you an example, if you look at the master circular for imports of the Reserve Bank of India, there are 140 line items which an importer has to adhere to, or the bank has to check when he looks at import document. Under the UCPDC, that is a Uniform Credit and for documentary credit practices for documentary credit, there are 39 items which needs to be checked. 39 items, these are line items. There are various case laws associated with it. The ISBP has got some 200 line items which a bank or corporate has to check when they are checking the documents on the letters of credit. This is completely cumbersome. And the other point which exporters and importers normally face is, it is very subjective, and it is found that on a particular day they would receive one document as discrepant, on some other day it would be non-discrepant, thereby there is no standardization of what is discrepant and what is not. So we have put in this platform. The last thing which I want to highlight is the abundant use of API connectivity that we can have through the various systems, thereby enabling the banks and the corporate to connect themselves with, say, shipping company. So one of the points which was discussed in this meeting was, can we look at the real-time location of the ship? So we've got a connectivity through API through Lloyd Shipping, whereby even the guy who is processing the transaction on the platform can see as to where the ship is, who is the owner of the ship, what is it containing, and even the container validation can be done online. It also can do have an API connectivity to your compliance platform, So for example, an exporter who is exporting to some country, and just for the sake of some of the people who may not be fully conversant with the compliance. So for example, Iran is an OFAC listed entity, listed country. So if suppose a ship is sails and he exports it on an Iranian vessel, and the amount is supposed to be coming through the US in US dollar, it is possible that it gets stuck, and the US authorities, the OFAC authorities, freezes the amount. So this helps. The platform helps in checking the compliance process through the API connectivity. So it is an AI, as I said, it is an AI-powered, artificial intelligence-powered solution, and it understands LC clauses just like a human would understand. It checks for standardized as well as non-standardized clauses, etc. It does the OCR engine. The earlier, when document checking used to take 3 hours, 4 hours in banks, corporates, etc., now it is reduced to a significantly lower time. And thereby it enables the economies of scale to be reaped by the banks and the corporates. And this is just the diagrammatic flow of how the process happens. We've got more than 250,000 algorithms running in the platform, which checks as to what are the clauses, whether the clauses are in order, whether the documents are in compliance inter se, that is the packing list matches with the invoice, and it also matches with the letters of credit, etc. So this is something becomes very easy for the banks to check and thereby go back to their clients, whether it is exporter or importer, as to how to what are the discrepancies in the document, if any, and send it. Apart from this, it would also enable the digitization of it and the automation of it, so that they are able to give this connectivity to their clients and send the document directly from based on the status holder exporter to the importer abroad. So basically, TradeStream is an extended ecosystem wherein we are partnering with insurance, Swift, logistics, etc. And it is not necessary that that any of the trade finance systems, so the banks, need to be replaced. This is a thin skin which is a part of which is laid down on top of the trade finance solution of the banks, and thereby enabling them to make decisions faster, turnaround times faster for their customers, and thereby reducing their working capital cycle. That's it from my end, Virat. Over back to you.
Yes, I would just like to also seek get your clarification on as we discussed that there can be sudden changes in compliance across markets. So what is the scope of this platform, as in is it a pan-global platform? And when there are such changes in compliance, how are you able to reflect that in real time? How are you connected to all those regulatory systems across markets?
So there are a good question, Virat. There are 2 or 3 compliance steps or types of compliance changes which would happen. One is the list of the entities, etc., which are blacklisted, which may change. So based on the connectivity, the banks or the corporates which are through whom they are getting the OFAC entity or the RBI blacklisted entity check, they would update it, and thereby through APIs this would get connected immediately. There would be changes in the rules, the ICC guidelines, etc., that we would do on our own because it is applicable globally. There would also be rules or compliance checks which is applicable to the banks or the corporates per se. So for example, a particular bank may say that I do not want to get into the exports or handle goods of a particular type. So the platform supports that if they receive a particular document on a document which says that the entity has entered into the export or import of goods of that particular type, which they do not want to enter into, those can be updated by the bank itself. So it is at a global level, it is also at a bank level, and it can also be at a transaction level based on the rules which you have set in for the transaction person. Virat, you are on mute.
Virat, you're on mute.
Yeah, thank you, Jayan, for that very interesting presentation. Ravi, would you like to share your experiences with the adoption of technology and the advantages it has provided your business?
Definitely. So technology is something, when we were pre-pandemic, I would say that, technology, or possibly it's 4 years down the line before, I would go back to possibly 2016. Technology was an optional thing. And we saw the rampant changes of technology being implemented somewhere in 2016, because in India, there was a demonetization. People started moving on from a retail point of view, individuals' point of view, more towards the UPIs and the other mechanisms of payments. So overnight, things changed. There was a regulatory push, and the complete paradigm disruption took shape at that point of time. However, in pandemic, that continued even further up the scale. I would say that today most of us are working from off locations of the offices, and that's why the technology has the primary driver in today's world. Going digital is not something which is an optional thing. I think it's more of a survival requirement rather than anything else. So we as an organizations are also adapting to the technology requirements. We are putting in place our systems in place to adapt to the changing dynamics of the new emerging requirements, which is going digital. And as Jayan also mentioned, that the paperless is something which is to be done. Blockchain is something to be done. Blockchain comes specifically from securing your transaction, whereas paperless and other digital means come from more of a customer service point of view, enabling service point of view. And blockchain comes more from a securing your transaction, but blockchain requires a more ecosystem. So we, as an organization in India Factoring, we have adapted actually blockchain solutions for our factoring solutions, which we offer, where we actually go ahead and check the authenticity of the documents by various touch points from the various touch points, including government GST enabled platforms, which enables to actually confirm that the invoice is actually valid and genuine from the transaction point of view. As regards the digital capabilities point of view, we are implementing we are in the advanced stages of implementing the new gen system for the digital capabilities, which will provide end-to-end, host-to-host sort of connectivities from a supply chain finance and factoring solutions perspective, which will enable not just the suppliers and also the buyers to have access to the systems, possibly pick and choose where the funding is required and opt for funding and have a live understanding of what the portfolio, what their statement looks like. So they can drop down, they can have a payment options, they can have drawdown options, and also prepayment options as well will be available. So that's expected, and I'm sure that most of the banks and organizations in the financial services segment are adapting to these situations, because, as I said, these are survival requirements, not just a it's a must-have requirements, I would say. Virat, you are on mute. Virat, you are on mute.
Yeah, on a related topic, Ravi, the fact that trade finance, the role of trade finance is being taken up by non-banking service providers as well, which provides a certain degree of risk, of course. So in such a situation, how can banks provide corporate clients with the liquidity and credit they need, and also ensure that their own risk is mitigated? So what are your thoughts on that?
Yeah, thanks for that. That's an excellent question. So this is an important requirement. Banks and non-banks, I would say non-banks in the trade finance world, there are very few. I think not many of them are operating within trade finance, but traditional ways of banking finance and the non-traditional ways. What we are seeing now is emerging trends of moving towards transaction-backed activities, which is possibly supply chain finance, the vendors finance or suppliers finance or the dealers finance, and factoring is what we are talking about. More from a trade-backed facility is what we are talking about. So most of the banks, the traditional means of financing, which used to be there as a legacy in India, which was CCs, that is cash credits and overdraft facilities, and possibly demand loan sort of structures. Now, we all know, especially the bankers and the users the end use of the facilities of such facilities is probably very difficult to monitor, and that's why we are sitting on a huge pile of delinquent customers or amounts probably going into lakhs of crores in Indian financial segment. So come to the transaction-backed activities where you have a direct site where the funds are being utilized, whether it is being utilized for genuine trades, services or not, or the business purposes, you have direct vision of all those activities. So increasingly, most of the banks are moving towards these trade-based finance activities where you have a site on where the money is going and where the money is coming in. As we also talked about, there is huge aspect on AML aspects also, which needs to be covered. And that's why the regulations are getting stringent, the banks adapting to those changes, and I don't see a challenge that most of the banks will be moving to the trade-based finance activities. Like us, what we are offering is a factoring solutions. The emergence of factoring and supply chain is something new to India. I would not say new, rather, it has been there for close to 30 odd years. Unfortunately, the regulations were not there, and regulations came about only in 2011, and that has done quite a change. However, any change which comes, which we are seeing during pandemic also, is difficult, or there is a huge amount of resistance to adapt to the new changes which are coming in. We are seeing increasing requirements by the customers also to move towards these alternative or new means of finance rather than relying plainly on the working capital finance as was the norm earlier. The benefits these facilities, what I'm talking about, supply chain or factoring facilities, is it is more balance sheet light structures. It is actually a sale of receivables, which earlier you were financing on basis of a hypothecation, the bank. Now you are actually selling off receivables. So what that means essentially is you're deleveraging your balance sheet. So you're not just raising finance, you're actually optimizing your balance sheet, also converting the debtors into the cash and improving your ratios, improving your all financial ratios. Now, put in place a simple example where a customer is faced with a working capital challenge and they want to grow as well. Now, obviously, he wants to raise CapEx. He wants to invest in new facilities as well, but not able to do so because of want of working capital or term loans because his balance sheet is not spruced up. From that perspective, selling off his receivables and converting debtors into cash is a more financially lucrative position where his ratios improve and possibly makes the banks, easily give them the loans which is required from the expansion point of view. So these are few activities which enable the customers. Another key important requirement is that from deleveraging point of view is mitigating your risk also. Mitigating risk not only from a financial services provider, that is banks or factors point of view, but also from a customer's point of view is to have a back-to-back credit insurance on the receivables. Now, we have been having ECGC cover in India, of course, for a number of years. Unfortunately, the way ECGC is there structured today, it's a government-backed entity. But there are new means of adapting to the credit insurance. And factoring comes to the rescue where it's bundled up solution, a suite of product and services which is being offered. So it enables finance, collections, and as well as credit insurance aspect, which the factor provides. And current situation is the most important or relevant aspect where 2 years back people were okay to underwrite risk themselves without covering a back-to-back insurance on any global buyer. But from the pandemic, there has been situation where the largest of the large companies have gone belly up. We heard earlier speaker during the other panel discussion that the amount of delinquencies or insolvencies are expected to go up even further, possibly once the reform measures go down. Now, in such situations, credit insurance come to the rescues, and that's where a bundled up product solution like a factoring supply chain comes handy. And that's where I see that market participants, industry players, and the banks are now adapting towards these requirements. The insurance regulators in India are also opening up this segment soon. And once that opens up, it provides a huge credit mitigant for the industry participants, specifically, I would say MSMEs, who are not able to provide collaterals, but they have strong receivables because they are supplying to the larger corporates. So that mitigates to an extent. And with the credit enabler like insurance, it is likely to be a huge risk mitigant for the bank. Thanks.
Yeah, thank you so much, Ravi. I would like to ask one question to anyone of you who would like to take it up. Obviously, there's a huge credit gap in the Indian export sector. We talk about it. So what is the extent of that credit gap or the trade finance gap at present? And in that context, how do you see the future for this industry and including opportunities for growth as well as challenges to growth as well as digitization? So anybody who would like to take it up? Ravi, would you like to take it up?
Yeah. So sorry, just to paraphrase, you're saying against the growth, what we are seeing, how it is affecting the growth aspects, right?
Yeah, in the sense that there's definitely a huge trade finance gap, right, which prevents our exports from, and there are studies which show that bridging this gap would help us grow our exports phenomenally. So in that sense, the trade finance industry, how do you see its future in the Indian market, and what challenges to growth would you like to talk about in particular? Need to be addressed?
So, just to give you a perspective from India, we saw in the earlier presentation that India is upwards of $300 billion of an export in financial year. That was only merchandise exports plus service exports. If you add another 200, that is 500 plus billion dollars worth of exports from India. Now, obviously, if you scale it down and check what is the amount being funded on all of these export trade, possibly it will come down to possibly less than 50% of that is covered by the finance by way of pre or a post shipment. Now, why do I say that? Because many of these customers, apart from the large corporates who are exporting and large sectors who are exporting like oils and gems and jewelry, probably they get finance. These small and medium enterprises, which we saw in earlier presentation, who form core up to 40% of our exports covered by them, they do not have that ease of raising that finance, and they end up sending the documents on collection basis, and the money is remitted only after the credit term. So they are sitting on an open credit without availing any banking finance on that trade transaction, apart from the normal banking financial aspect which they might be doing. But that leaves out a huge opportunity. Now today, LCs and documentary credit form a critical component of exports from India, but LCs globally are on the declining trend. More and more large corporates are asking for open account terms, and the competition. When I say competition, is the markets, exporting markets in our neighborhood areas within Asia itself are opening up to these requirements of enabling open account transactions by way of moving to the new means of finance, like factoring, supply chains, finance solutions to the exporters from India. So there is a huge credit gap for these aspects which needs to be abridged. I would say that today, from an open account point of view, it is a total of $70 billion which gets exported on an open account transactions for the SMEs and MSMEs and the sectors which allow or follow those methodologies of open account trade transactions. However, if you see the turnover done by the factoring, supply chain, or open account business support, I say that it's roughly around about $5 billion or so. So huge gap, a $65 billion worth of credit which doesn't get financed in a manner which should be done, and that is only increasing. Because the LC's business is slowly a dying business. I'm not saying it is dying tomorrow, but it will eventually die out. And to make it more viable, we require an open account finance mechanisms by the banks, factors, and even the fintech companies which are coming into play. So huge opportunity, at least to cover the gap. And also, I would say a further step, not only to cover the gap, but since India is positioning itself to become a $5 trillion economy in the next few years, these sort of initiatives, a new means of finance, how do you do that? The GDP is not just derivative of one function, but it has a multiple function, and finance is an equally important aspect. So these sort of credit enablers will put in place a strong mechanism and cover that trade gap.
Thank you
I
so
would
much,
just like to
Ravi.
add here. Yeah,
Sure,
I would
sure,
just like to
Raki.
add
Yeah.
here, Virat. Can you hear me?
Yes, yes.
Yeah, yes, I can hear you. Please
Yeah.
carry on.
Yes, yes. So earlier we heard in another presentation that there's about $9 trillion of financing gap globally and about $400 billion in India itself. And based on a lot of surveys, it has come up that lot of traditional banks feel that it's because of the compliance cost that's going up. Their profitability is getting under pressure. Right, and that's where we are seeing a lot of alternate financing, and I think fintech is going to play a major role in filling up this gap, because they are able to handle this through the use of technology. They are able to handle these compliance costs in much effective manner, and a lot of traditional banks are also partnering with such fintechs so that they can control their costs and they can increase this or reduce the financing gap. So I think that is one trend that we are seeing right now to fill up this gap. Over to you, Virat.
Yeah, thank you, Raki. Jayan, any comments on the market potential which you would like to make?
Yeah, I would like to make this with the advent of the new technologies, the ease of processing, etc. What we will be seeing in the coming months and years is that the banks and the fintechs would be able to process transaction, provide trade finance at a much faster pace, provided they are able to check these documents electronically. They are 100% certain that these documents are indeed credit compliant, and thereby the time which is required for providing the finance, or even if the finance is not provided, to realize the bills would be much faster, and thereby reducing the working capital cycle of the exporters.
Thank you, Jayan. That's all from my end from the session. We are opening the forum to questions. So, Damaira, any questions from the audience?
We've just opened the floor. If anyone has any questions, please feel free. Gaurav, we don't have any questions yet for the session. However, we'll give it a quick second before we could move forward.
Sure.
Thank you, everyone, for your valuable insights and thoughts on the topic. Now, I would once again like to thank our supporting organizations. So thank you to the Government of India, Ministry of Commerce and Industry, Office of Additional Director General of Foreign Trade, Ludhiana, Federation of Indian Export Organizations, SME Chamber of India, Trade Promotion Council of India. And we would also like to thank our event partners, TradeWind Finance, Saxo Group, Vivanta Capital, ICT Circle, TradeStream, EuroExim Bank, India Factoring. Now let us move forward with one of the most exciting part of the event, the India Trade Review Awards. The India Trade Review Awards recognizes and honors the performance of the organizations and their commitment for trade, banking, and finance. The award aims to identify key players in this domain who deliver exceptional service, adapting to international prototypes. The ITR Awards is here to applaud the top finance organizations of India who are setting new benchmarks and pushing the boundaries of financial industry. Before we begin, we would like to honor and award the supporting organizations. We would like to thank Government of India, Ministry of Commerce and Industry, Office of Additional Director General of Foreign Trade, Ludhiana, for their support. Thank you so much. We appreciate your support for this event and taking your time to present on this platform. We would now like to thank the Federation of Indian Export Organization for their support. Thank you so much, and we appreciate your support for this event and taking your time to present on this platform. We would next like to thank the SME Chamber of India. Thank you, SME Chamber of India, for the support you have provided at this event, taking your time to present on the platform. We would now like to thank the Trade Promotion Council of India. Thank you so much for the support and your presence at this event. Now, without much ado, let us begin with the ITR Awards 2021. The award for the Best Trade Finance Bank goes to Euro Exim Bank. Euro Exim Bank Limited is an innovative global financial institution with its head office in St. Lucia and representative office in London. They hold a Class A international banking license from Financial Service Regulatory Authority of St. Lucia. This license provides authorization to conduct business with third parties across industries and geographies worldwide, exercising strong due diligence, full compliance, and operation excellence in our progress. Congratulations, Euro Exim Bank. The award for the Best FinTech Disruptor goes to InfraSoftTech. InfraSoftTech is a FinTech digital solutions provider for the BFSI sector. They transform businesses by enabling them with a wide range of advanced digital solutions and new age technologies such as AI, RPA, big data, etc. A big congratulations to InfraSoftTech. We now have our next award, which goes to the Tradewin Finance for the Best Alternative Finance Provider. Tradewin Finance is an international trade finance company that is comprised of experts around the world that truly understand international trade and cash flow management to sustain and grow businesses. We provide liquidity for enterprises in developed, emerging, and frontier markets trading internationally. Congratulations, Tradewin Finance and team. Our next award goes to Vivanta Capital for the Best Trade Finance Newcomer. Vivanta Capital is conceptualized with the idea of ethical, profitable, and sustainable growth through a partnering approach. Vivanta has been set up by a team of professionals with over 2 decades of experience in the trade finance and structured debt. Congratulations, Vivanta Capital. The next award for the Best Trade Finance Software Provider, which goes to TradeStream. TradeStream provides an ever-updating service that digitizes and stores your trade finance documentation, extracts the data into structured information, and checks it against over 250,000 trade and compliance rules. Congratulations, TradeStream. Our next award goes to M1 Exchange for the Best Digital Platform. M1 Exchange Trades is a digital marketplace to sell the receivables to banks, NBFC, set up under the approval of Reserve Bank of India to facilitate the discounting of invoices and bills of exchange on a pan-India basis. Congratulations, M1 Exchange. Our next award goes to ICT Circle for the Best Trade Credit Insurance Provider. ICT Circle is a B2B platform for ICT ecosystems, helping members to connect and strike profitable deals. Whether it's a vendor or a distributor, ICT Circle can increase your client base profitability and efficiency in your niche domain. We have an entire member base of resellers, wholesalers, retailers, system integrators, and bulk buyers. Congratulations, ICT Circle. We would again like to thank our supporting organizations. So once again, a big thank you to the Government of India, Ministry of Commerce and Industry, Office of Additional Director General of Foreign Trade Ludhiana, Federation of Indian Export Organizations, SME Chambers of India, and Trade Promotion Council of India. Once again, we would like to thank our event sponsors, Tradewind Finance, Saxo Group, Vivanta Capital, ICT Circle, TradeStream, Euro Exim Bank, and India Factoring. Do remember our next trade review series, which will continue in the Middle East and Africa. It is the Middle East and Africa Trade Review to be held on the 28th of June, 2021. For further inquiries, please do get in touch with our team. Now, I'd like to thank each and every one of you, everyone who's been a part of our audience, who took out their valuable time to join us. Thank you and stay safe.